Okay. Good morning, everyone. Welcome to Baiju's Exam Prep IAS. This is Sham Kagudia. If there is no issue with the sound, please do let me know so that we can start the discussion for the day. Can we start? Give me a thumbs up, say Y yes or alphabet yes or Y. Anything is okay with me. Okay, done. Thanks a lot. Thanks a lot. Let's start. So, welcome to the third class. Again, the third day for Indian economic classes for you. Yesterday, we have discussed the concept of inflation. Did you people just get a chance to glance through what we have discussed yesterday? Is it connected to current affairs? I've given you a list of articles. Were you able to read some of those articles and understand, okay, this is how current affairs is connected to the static portion that you are studying, etc. So yesterday we have discussed inflation. Right? For example, right? Again, understand this. Just to give you a basic idea of what we have discussed yesterday, I told you yesterday uh, one way to make it easier, one way to make your preparation easier, especially for Indian economy, is that I said try to make mind maps. Try to prepare mind maps. For example, inflation. Can I make a mind map for inflation? This is how the mind map I'll be preparing. Have a look at this. Inflation, I'll start with the definition of inflation. Done. I will start with the definition of inflation. And when you prepare a mind map, don't write the term definition. Write what is the definition. One of the definitions that I've given you is inflation refers to rise in the price level for basket of commodities. Whenever there is a consistent or persistent rise in the price level of a basket of commodity, basket means collection of or a group of commodities. That is referred to as inflation. After that, what we have seen, right? We have seen the classification of inflation. The classification. I've given you two classifications. One is based on the rate of inflation, right? One is based on the rate of inflation. For example, what is moderate inflation? What is hyperinflation? What is a galloping inflation? And one more classification that I've given to you is based on the causes of inflation. Again, this is a classification. One is causes of inflation. And in the causes of inflation, if you remember correctly, I've given you, right? One is a demand pull inflation. Second one is a cost push inflation. One is a demand pull. Second one is a cost push inflation. In case of a demand pull, I've given you various causes which can lead to higher aggregate demand in the market. For example, RBI increasing money supply, Government of India increasing its expenditure, which will increase money supply. The GDP will increase, with that the income of the people will also increase. And what is the importance of that? When GDP income increases, automatically the aggregate demand will also increase, etc. On the other side, I've also given various causes which will lead to cost push inflation. For example, what if the cost of raw material goes up? What if the GST imposed by the government will increase? What if the import will become costlier? What if there's a cartelization? What if there is, right, let's say hoarding, etc., etc. So even in the causes, I've given you classification, right? So next, after classification, what are the measures of inflation? I've given you two measures of inflation. Now, what are the two measures? One is CPI, Consumer Price Index, and the second one is WPI, Wholesale Price Index. Now, what are the important points for CPI? Right? Until now, we used to measure CPI IW, CPI UNME, CPI AL, Agriculture Labor, CPI IW, Industrial Workers, CPI UNME, and CPI AL. Now, what Government of India has done is it has introduced a new system, that is CPI Rural, CPI Urban, and a CPI Combined. Rural, urban, and combined. And I told you very carefully yesterday also, right? The term that you just come across in the newspapers very often, right? Whenever you talk about the retail inflation, etc., it is CPI combined. Who will publish a CPI? It is published by NSO. NSO functions under Ministry of Statistics and Program Implementation, and it is published for every month. It is published for every month. For month of June, the data is available. For month of May, it is available. For month of July, it will be published in the month of August, etc., etc. Then, in case of CPI, how many commodities are there in the combined? 299 commodities are there. It includes both goods as well as services. And if you remember correctly, the highest weightage in case of CPI has been given for food and beverages, around 46%. Followed by this is miscellaneous, right? And the third important component I told you to simply by heart is fuel and light, which has around 6.7 and 6.8%. These are important points regarding CPI. What about WPI? I can make a classification of WPI like this now. Just a second. I can make a classification of WPI in this way. That is, in case of WPI, these are the points I'll write. What are the points? Starting WPI, Wholesale Price Index, right? It is published by Ministry of Commerce, Economic Advisor in the Ministry of Commerce, and this is published for every month. It is published for every month. Then in case of WPI, we have three groupings, if you remember it. Manufacturing has the highest weightage, around 64%, followed by primary articles, around 22%, and remaining around 13% has been given for fuel, right? Fuel and light. And followed by this, right? Basically, 697 commodities are there under WPI. And this will measure the change in the prices in the wholesale market. In the wholesale market. These are the measures. After that, we have discussed, right, the Monetary Policy Framework Agreement. MPFA, Monetary Policy Framework Agreement. What are the important points under MPFA? Point number one. Under this, we have amended RBI Act. RBI Act of 1934 has been amended. Point number two. Government in consultation with RBI will be deciding what is the inflation target, again CPI headline inflation, which has to be maintained by Reserve Bank of India. Right now, the target from 21 to 26 is 4% plus or minus 2%. That will be a maximum of 6%, the lowest will be 2%. And RBI has to publish a report once every 6 months. Once every 6 months, the report has to be published by RBI. Followed by this, if there is a crossing of more than 6% or less than 2% for 3 consecutive quarters, then RBI has to give a written explanation to Government of India. These are certain very, very important points regarding the concept of Monetary Policy Framework Agreement. Okay, then we have discussed certain important concepts. Certain important concepts such as deflation, disinflation, headline inflation, core inflation, GDP deflator, the Phillips curve, inflation tax, right? The spiral, right? That is labor wages spiral, etc. So these are basically this is how I would prepare a mind map for the chapter of inflation. So I know initially it will take some time. Initially it will take some time, but please do let me know after looking at the whole mind map. Please tell me, will it be helpful for you to revise the chapter of inflation much easier, much quicker or not? So ideally the argument is simple. Ideally the subject should be easier for you. Don't make it more complicated. It should be easier. Preparation should be easier. So one way to make it easier, and again, please understand, I'm not saying you must follow this. I'm not using the term you must do this. No. Whatever suits you the best, whatever is the best technique that you have, which will make it easier for you to remember and revise, use that technique. This works for me. You decide what is suitable for you people. Done? So this is what we have discussed yesterday. Now let me start with the next chapter, the idea of a fiscal policy, that is taxation. Now before I start, I hope you remember the definition of fiscal policy. Yesterday, by the way, I've told you what is the definition of fiscal policy, right? That is, I'll come back to this, don't worry. Fiscal policy refers to usage of taxation and expenditure to achieve various objectives. Right? Some of you simply say, sir, yesterday the definition that you gave was something else. What I told you yesterday was fiscal policy refers to a set of policies related to the taxation policy of the government and expenditure policy of the government. But what do you think is the objective? Why do you think government will have an expenditure policy? Why do you think government will have a taxation policy? Don't you think either taxation or expenditure, government wants to achieve certain objective? That is the reason they have policies. Done. So this is the definition of a fiscal policy. So in fiscal policy today, we'll be discussing about taxation. Right? A lot of current affairs is there. Please be very careful. Taxation as such is very much important for civil services, both in prelims as well in mains examination. So what we will be covering in the chapter? We'll start with the basics of taxation. Then we'll understand the different types of taxation systems. We'll discuss certain types of taxes as well. Then problems with India's taxation system. What are the reforms which have been announced? Laffer curve as a concept. And finally, as usual, the questions which have been asked in the last couple of years on the taxation chapter. Now, let me start. Taxation. What do you mean by the term tax? What do you mean by the term tax here? Right, the tax basically is a compulsory charge, or it is a compulsory levy that is imposed by the government on either individuals, on the companies, etc. I repeat it. What is a tax? Tax is a compulsory levy, compulsory charge that is imposed by the government. Government will impose this on individuals, on companies, on investors, etc. That is the definition of the term tax. Now, why is that government will impose the tax? Understand the logic behind government imposing the tax. Point number one, tax is a very important source of revenue for the government. Tax is a very important source of revenue for the government. Government will collect revenue. One of the important source through which government will collect revenue is by imposing and collecting taxes. For example, government will impose income taxes on all of us. Government will impose corporate taxes on companies. Government will impose and collect GST, etc. So government will impose and collect the money, and this forms a very important source of money, revenue, income for the government. Now, second very important point, please understand this. Why we say that this is a very important source? Because tax is one-sided payment. It is simply one-sided payment. That is, a taxpayer will pay the tax to the government. Understand this carefully. Will pay tax to government. But please tell me, can you dictate for what purposes the government is supposed to use this money? Think of it and let me know. Can you tell government for what purpose the government is supposed to use this amount of tax? No, you cannot dictate any terms. You cannot put any conditions on the government. Let me give you a very simple example as to what I mean conditions here. Imagine I'm paying GST of 10 rupees to the government. Can I tell government how they are supposed to use this 10 rupee? Can I put conditions on the usage of 10 rupee to the government? No, you cannot do that. Right? You will have to pay the taxes, no doubt regarding that. But you cannot simply tell the government for what purpose they are supposed to use that money for. Now it is up to the government. Government will collect this amount of tax, whether they want to use it to construct airport, or they want to construct a national highway, or they want to launch a new scheme, or they want to provide pensions to the poor people. Whatever is the objective, that is entirely left to the government. Government has the right regarding usage of this money. And third one, whenever the government is able to collect a higher amount of taxes, remember this, if the government collects higher amount of taxes, the reliance of the government on borrowings will come down. I'll write the point here. Reliance on borrowing will come down. Now, what is this concept of a borrowing here? Let me give a very simple example. Please understand this. Annually, that is for every financial year, government will announce a budget. All of you know this? This should not be news to you. This should not be anything new to you. That is, a government for every financial year will announce budget. And whenever government announces the budget, don't you think government on one side will tell how much money they are collecting? that is how much revenue they are collecting and how much expenditure they are doing. Any problem in understanding this? Government for every year will announce a budget. For example, in the month of February, government announced a budget. Next year in the month of February, government again will announce the budget. So whenever government announces the budget, they will tell you how much money they are going to collect and how much expenditure they are going to incur. And generally, if you see it, the total amount of expenditure that the government will make will be greater than the total amount of income they are collecting. I is income, E is expenditure. Government spending more money compared to how much they are collecting. But please tell me, if you are able to spend more compared to how much money you are collecting, don't you think you will be forced to borrow from the market? Yes or no? If you're going to spend more money than how much you are earning, don't you think the shortfall is shortage, the gap, you'll have to borrow from the market. Now please tell me, if government is able to collect more money in the form of taxation, can I say the government's reliance on borrowing will come down? Any problem? I'll repeat the statement again here. If government is able to collect more amount of taxes, more amount of income in the form of taxes, don't you think the reliance on borrowings, the dependence on the borrowing will automatically go down? Right? That is also one of the reason why, right, these taxes are very, very important. And fourth point, there is no repayment related to taxes. Government doesn't have to repay this amount of taxes. That is a beauty. Government will collect income taxes from you. Let's say 100 rupees. I'll take a simple example here. Government of India will take 100 rupee income taxes from you. And on the other hand, government will also take a loan of, let's say, 100 rupees. Right? Both are 100 rupees only. But don't you think here government will simply collect income taxes, doesn't pay any interest on this to you, and does not return back 100 rupees to you? But on the other hand, if government is borrowing 100 rupees, it will pay the principal back of 100 rupee, and it also has to pay interest on the borrowing of 100 rupee. So if you are the government, look at this and tell me, if you are the government, would you want to collect the 100 rupee in the form of loans, or would you want to collect 100 rupee in the form of taxation? Don't you think taxation makes more sense for the government to impose and collect, because the revenues will be used and it doesn't have to repay or pay any amount of interest on this? These are some of the reasons why government will impose and collect a lot of taxes. In fact, next week when I discuss budgeting, we'll have an exercise, or we will have a discussion on the chapter called as budget. And when I discuss the chapter of budget, in fact, I'll show you in 1 year, this is generally true. In 1 year, out of all the money that the government will collect, around 60% of the money will come from the taxes itself. Is it okay? I'll repeat it again. In 1 year, out of all the money that the government will collect, around 60% of it will come in the form of taxes itself. And that is the precise reason the taxation policy of the government is very, very important, both equally for the central government as well as for the state governments. Now, the third term is tax base. Third term is a tax base. What do you mean by the term tax base here? Tax base refers to the object on which the government will impose a tax. Tax base refers to the object on which government will impose and collect a tax. For example, can I say this, right? Let's say remote control is part of the tax base. Please do let me know whether you agree with this or not. This remote control is part of the tax base. The laptop that you are using is part of the tax base. The computer, or let's say the AC, the refrigerator, TV, right? The Maggie that you have purchased, the movie which will go to the IMAX and watch, everything is part of the tax base. What about the income that you are earning? It is also part of the tax base. What about the assets that you have? It is also part of the tax base. So is it okay now if I say one way that the government of India will be able to collect more and more tax revenues is by expanding tax base? Please do let me know whether this makes sense or not. One way that the government will be able to collect more and more tax revenues will be by expanding tax base. Now, the reason why I'm asking you all of this is, how many of you have read the newspaper article regarding GST? GST, right, on lottery, GST on betting, GST on, right, online gaming, etc., which is imposed uniformly at 28% now. Let me see how many of you have read that article. Right, you will come across one point there. Some of these things were not covered under GST until now. Now they will be brought under GST and we will have a uniform tax rate of 28%. I'll repeat the statement. Some of these were not covered under GST. Now they'll be brought under GST and we will have a uniform tax rate of 28%. Now please tell me, if these were not under GST and are brought under GST, right, don't you think the tax base is going to expand? If the tax base will expand, can government collect more and more tax revenues from this? In fact, Government of India has categorically stated, with imposition of 28%, we'll be able to collect more and more amount of taxes. Right? Let's say hypothetically, there is one product. I'll take a very simple example. Imagine this one. This until now was not taxed by the government. Very simple idea. Okay, this is one more type of remote control. This until now was not covered under taxation. There was no tax imposed on it. Now, what if Government of India announces today, even this type of a remote control will be taxed, will be covered under taxation? Can I say tax base will expand? And if the tax base will expand, can Government of India collect more amount of taxes? Done. I'll give you one more example. All of this is connected to current affairs. That's the reason I'm asking. All of this is connected to current affairs. I'll give you one more example. If you earn income through agriculture, that is, let's say you're a farmer, you will earn income in farming activity. Government of India doesn't impose any income tax on that income. This is a fact. You earn income through agriculture, the government will not impose and collect any income tax from you. But what if Government of India tomorrow announces, even the farmers who are earning more than, let's say, I'll just throw an arbitrary number here, who are earning more than 5 lakh rupees per annum will have to pay income taxes. Question number one, will the tax base increase or not? Answer now. If government announces that even the farmers who are earning more than 5 lakh rupees will have to pay income taxes, will the tax base expand? Yes. With the expansion of the tax base, can government, right, collect more and more tax revenues? Again, the answer is yes. Again, the answer is yes. Right? Why I'm asking all of this is very simple. If UPSC wants to make the question difficult to you or slightly tricky to you, can I give you a question like this? Which of the following, which of the following might lead to higher tax collection, for the government? Which of the following might lead to higher tax collection for the government? For the government. 1. Imposing higher tax rates. Imposing higher tax rates. Second, widening the tax base. Widening the tax base. Third, inclusion of online gaming under GST at 28%. And if these kind of questions are given to you, I hope you understand. Basically, UPSC has introduced a new system now. Until last year, right, they used to ask only 1 and 3 are correct. Only 1 and 2 are correct. Only 1 is correct. Now that is gone out of the window. New system. Only one is correct. And when I say one statement, only one statement is correct. Only two statements are correct. Have you checked the new format? Only two statements are correct. All three are correct. All three are correct. And finally, none of the above or none of them are correct. Tell me which is correct. Right? I'll call this as A, B, C, and D. Tell me A, B, C, or D. Which is correct? Let me see how you people look into all these concepts. Right? The right one is C. All the three are correct. Some of you are saying 2 and 3. No. There was no option 2 and 3. Please check. There was no option of 2 and 3. I asked a very simple question, A, B, C, or D. C is the right one. Imposing higher taxes. Imposing higher taxes, will the government be able to collect higher amount of tax revenues? Yes or no? If government will impose higher taxes on the commodities, will the government's revenue increase? Of course, yes. Widening of the tax base. Just now I've told you this. Right, that is widening of the tax base basically means more and more objects will be brought under taxation. That will lead to higher amount of taxation. Inclusion of online gaming under GST at 28%. Until now the GST rate was much lesser. Now it will be uniform at 28%. In fact, please be very careful. It's very complicated. Concept is very complicated. I'll explain it later. Until now it was 18%. Now it has been increased to 28%. So automatically the amount of tax rate, when it is increased to 18 from 28%, automatically the tax revenue collected by the government is expected to increase. Right? So right option for this question will be option C. Okay, option C will be the right one. Okay, these are the three. These are the kind of questions that UPSC will ask. Inclusion of online gaming is widening of tax base. Let it be. Say all of them is correct. I hope you understand. All of them are correct. Let it be either inclusion or exclusion, whether tax base is widening. One is a very larger term, right? Umbrella terms. One more is option within that. Right? What is the problem? Say even that will lead to higher amount of taxes. Okay, so any problem so far? Can I go forward? Any problem? This is basically introduction to the taxation. Now, what are the systems of taxation? What are the types of systems in taxation? First one is a direct tax and indirect tax. First one is a direct and second one is indirect. Let me start with examples. Example 1. Example 1. Government of India will impose a tax on an individual. I'll give you examples also, actual names also, have patience. Government will impose a tax on individuals and the individuals will pay the tax to the government. Will pay the tax to the government. Example 1. Example 2. Government will impose a tax, let's say, on a hotel or a restaurant. Government of India is imposing tax on whom? It is imposing tax on a hotel or a restaurant. But this hotel or a restaurant will impose and collect this tax, impose and collect this tax from a customer. And then pay this tax, pay the tax to the government. So step 1, step 2, step 3 and step 4. Here step 1 and step 2. Please look at both of the examples and tell me both are different or same. Think of it. You don't have to be worried about anything technical. Focus on the basics. Both are different. What is different here? In both of the situations, it is individuals or customers who are paying the taxes. It is us, you and me, who are paying the taxes. But what is difference here? In example 1, government is directly imposing tax on me and I am directly paying the tax to the government. Whereas in the second case, government is not imposing tax on me. Government is imposing tax on a hotel. But what is the hotel doing? Hotel or a restaurant, it is collecting that tax from me and then giving it to the government. That is basically the example 1 is an example of a direct tax, and example 2 is an example of indirect tax. For example, direct taxes, income taxes. Don't you think? Right, the first one is example of an income tax. Government will say you are earning income, please pay income tax. So government is imposing tax on me, and I am only paying directly the taxes to the government. Right, the money is directly going from me to the government. That is income taxes. What about wealth taxes? What about property taxes? For example, I own a house. The municipality will ask me to pay property taxes. So whoever is the owner of the property tax will pay the tax to the government. Right? So government will impose a tax and collect it from the same person. That is the concept of direct taxes. Whereas in case of indirect taxes, right, the government basically tells the best example. This is the best that a teacher can ask for. The 28% GST, you please tell me now. 28% GST, is it directly being imposed on a gambler? Tell me. Those who have read the newspapers, which I expect you to read, I will repeat the question. The 28% tax, is the government imposing the tax directly on those people who are betting, those people who are gambling? No, my dear. If you say yes, some of you saying yes, that is very, very surprising to me. That is very surprising to me. Who is opposing this in the newspaper? Are you opposing? Then what are you reading in the newspaper? Who is opposing this 28%? Casinos, are they not opposing? The online gaming companies, are they not opposing this? Then how can you say that 28% is directly imposed on me? No, my dear. Read at least correctly. Government has imposed 28% GST on online gaming company. It has imposed 28% GST on casinos. 28% GST on horse betting, horse racing, those companies which are involved there. And do you think the online gaming company will pay the 28% from their own pocket? Do you think that? No. When you start playing the online games, when you start betting online, they will collect that money from you, transfer it to government, give it to government. So can I say, in case of indirect taxation, there is a concept of transfer of tax burden? Let me know. I'll repeat the statement. In case of indirect taxes, there is a transfer of tax burden. Government will impose the tax on online gaming company. They will transfer the tax burden to you. The government will impose the tax on, let's say, the restaurant. The restaurant will transfer the burden to you. So whoever is the consumer, whoever is the right consumer or customer or a buyer will end up paying taxes. This is basically the concept of indirect tax. And can I give you the best example of indirect tax? GST. All of you will agree? GST, is it a direct tax or indirect tax? Government is not imposing the GST directly on you. No. The service provider is there. The government will impose the GST on the service provider, product seller, manufacturer, etc. And what they will do is, when you will purchase the product, when you will go to restaurant, when you will start playing the games online, when you will enter into betting games, they will collect that tax from you, give it to the government. This is basically the idea of a direct tax and indirect tax. So direct taxes, best example, income tax. Corporate tax. Corporate tax is basically part of the profits, that the companies will pay to the government. Is it okay? Corporate tax is imposed on profits of the company. A company is there, it has earned a profit, right? Then government will impose and collect a part of this profit from the company. That is corporate tax. Now, many of you will basically ask me, sir, what if company incurs a loss? Now, you tell me, right, as I was saying, one of them has asked, if a company is incurring a loss, do you think government will impose and collect corporate tax from such company? Let me know. If a company is incurring a loss, do you think it is correct for the government to impose and collect corporate taxes from the company? No, my dear. How? How does it make any kind of a rationality, you tell me? Okay, right? So corporate taxes and property tax. VAT stands for value added taxation. Full form is there in the later slides. Have patience. Excise is imposed on production, right? GST, goods and services tax. We'll discuss GST in detail today. Don't worry about it. Okay, so this is direct taxes and indirect taxes. Now, right, let me go to the next point here. Let me go to the next point. Whenever you talk about direct taxes and indirect taxes, right, please remember this very carefully. Direct taxes can differentiate between taxpayer. I'll repeat the statement. Direct taxes can differentiate between the taxpayer, whereas indirect taxes are universal in nature, cannot differentiate between the taxpayers. What do you mean by this? Let's say you will go to the shop and you want to purchase this remote, and government has a GST of 10 rupees on it. A billionaire will come to the shop and a billionaire also wants to purchase remote control. Don't you think the billionaire will also pay 10 rupee GST? A poor person will come to the shop and wants to purchase remote control. What is the GST paid by the poor person? Same 10 rupee. Now look at the statement and tell me whether this is correct or not. The indirect taxes cannot differentiate between the taxpayers. That is, whatever is the capacity to pay taxes, that does not matter in case of indirect taxes. Everybody will end up paying same amount of indirect taxes. Whereas in case of direct taxes, don't you think what is your capacity to pay the taxes? What is the capability of the taxpayer? Based on that, taxes will be imposed and collected. For example, what do you mean by this? Let me ask you a very simple question. Imagine there are two people in India. A is earning annual income of 10 lakh rupees. B is earning annual income of 1 crore rupees. C is earning annual income of 10,000 rupees. Please tell me, is it fair? Is it fair to collect the same amount of income taxes from all of them? Let me know. Is it fair to collect the same amount of income taxes from all of them? No, it is not fair. Why? If the incomes will keep on changing, don't you think based on their payment capability or payment capacity, we should be collecting income taxes from them? Right? In such cases, C has very low income, less than 2.5 lakh rupees. Government says don't pay any income taxes. A has a 10 lakh rupees. So government will impose a certain amount of income taxes and collect from A. B has the highest amongst all the three. 1 crore is very high in India. So government will impose more, right? More amount of income taxes and collect more income taxes from B. Is it okay if I say direct taxes can differentiate between taxpayers and based on their capability, we will collect, right, the taxes from them. Whereas indirect taxes are universal in nature. Doesn't matter what is their income, doesn't matter what is the payment capability. We will impose universally, and anybody who will purchase, who will consume, will have to pay same amount of indirect taxes. All of you will agree with me? This is important in the context of direct taxes as well as indirect taxes. Now, why this is required? Because there are three more types of taxation systems. One is called as a progressive, second one is called as a regressive, third one is called as proportional. One is a progressive, second one is a regressive, and third one is called as a progressive nature of taxes. Remember this, progressive. Let me start with a very simple example of this, income taxes. If I go back to earlier example, is it okay if I write based on the amount of taxes paid by all the three people, if I write them in ascending order, it will be like this. C, right? A C will pay the lowest amount of taxes, followed by C will be A, and highest amount of taxes will be paid by B. Any problem? I'll repeat the statement here again. In this example that I've written here, based on the taxes which are paid by all the three individuals. If I write in ascending order, lowest amount of taxes will be C, paid by C, followed by A, and highest amount will be paid by B. Now, can I give one more statement here? That is, in this system, as the income of the person has increased, as the object under taxation has increased, the amount of taxes imposed and collected also has increased. I'll repeat the statement here. Look at it and please do let me know. As the tax base, as the object under taxation has increased, the amount of taxes imposed and collected also has increased. Yes or no? All of you have understood the statement? Why? Please understand, whenever this happens, that is, the tax rate imposed and collected will increase with the object under taxation, such a system is called as progressive rate of taxation. Such a system is called as progressive rate of taxation. For example, I'll just give you one example. Do not by heart it. Income taxes in India are the best example of this. How? Right? Look at this. If you earn less than 2.5 lakh rupees, if you earn less than 2.5 lakh rupees, what is the income tax rate? 0%. Less than 2.5, 0%. Right? Let's say 2.5 to 5 lakh rupees. Let's say 5%. Right? 5 lakh to 10 lakh rupees, 20%. And more than 10 lakh rupees, it is 30%. Have a look at the system here. Up to 2.5, 0%. 2.5 to 5, 5%. 5 to 10, 20%. And more than 10, 30%. Now, please tell me, with a rise in the income, the tax rate and the taxes paid, are they increasing or not? With this system, and whatever the exact number is, please do not by heart this number. UPSC is not going to ask you this. Do not by heart these numbers. Why? There are two income tax systems in India. Right? For individuals, there are two sets of income taxes. One with deduction, another with no deduction. Right? Again, don't complicate it. You don't have to become a chartered accountant. Remain GS paper student. More than sufficient. So now, is it okay if I say, with a rise in the income, the automatic taxes that you pay because of this kind of a structure will also keep on increasing? Such a system of taxation is called as progressive rate of taxation. Progressive rate of taxation. Second is a regressive rate of taxation. Regressive system. What is this regressive system? The income will widen. How much is your income? It will keep on widening. But out of this income, what is the percentage of the income you will pay in the form of taxes? I'll repeat the statement. Regressive is the tax rate, right, as a percentage of your income will keep on decreasing with a rise in the income. Let me give a very simple example here. Imagine there is a person who earns 1,000 rupee and there is a person who earns 10,000 rupee income. And let's say they will go to market and purchase one product, and on this product the tax rate GST is 100 rupees. GST is 100 rupees. Now, can I say, in case of person A, 10% of the income has been paid by A in the form of taxation. Any problem with calculation? For person A, he has paid 100 rupee GST. 10% of the income is paid by A in the form of taxes. And for the second person B, it's not 10%. It is 1% of the income has been paid by the person in the form of taxation. If I take one more person, let's say who is earning 1 lakh rupees. Who is earning 1 lakh rupees. For this person, it will be how much? 0.01%. Sorry, 0.1%. Person C is paying GST of 100, which is nothing but 0.1% of total income. And if I take one more person D, who is earning 10 lakh rupees, Person D is paying how much? 0.01% of the total income in the form of taxation. Now, please look at the statement and tell me, with the rise in the income, how much of the income they are paying in the taxes is actually decreasing? Correct or wrong? I'll repeat it again. With the rise in the income, as a percentage of the income, how much taxes they are paying is actually decreasing. Whereas here it will be higher, here it will keep on decreasing, which means this is right, basically a regressive type of a taxation system. In case of regressive, right, and please remember, traditionally, right, economists agree that indirect taxes are regressive in nature. I'll repeat it. Indirect taxes are regressive in nature. For example, GST, it is regressive in nature. Excise duty, regressive in nature. Why indirect taxes? I'll tell you why. Indirect taxes, already I've told you the reason, now applied. Can indirect taxes differentiate between A, B, C, and D? Please tell me. Two of you are asking what is the reason why indirect taxes are regressive in nature. I've already given the answer to you, but I'll reiterate it. Can indirect taxes differentiate between A, B, and C, D here? No, it cannot differentiate. Whereas income taxes, please let me know now. Whereas income taxes, can income taxes differentiate between A, B, C, and D? All of you will agree? Income tax rates, automatically government will change income tax rates for all of them and ensure that as a percentage of their income, they'll pay more and more as the income keeps on increasing to the government of India. Right? That is the reason indirect taxes are regressive in nature. Correct. Indirect taxes are regressive in nature and direct taxes are progressive in nature. Can I go forward here? Any problem? Can I go forward? For GS paper, this is sufficient. In fact, at optional level, we'll clearly have one more concept called as average rate of taxes and marginal rate of taxation. But that is more of a requirement for a optional paper. For GS paper, this is more than sufficient. Now, third one, proportional taxation. Proportional taxation. Now, what do you mean by proportional taxation? Proportional taxes simply means tax rate will not change. Tax rate will remain uniform for all the people. All the taxpayers, tax rate will remain uniform. For example, understand this carefully. In case of India, for set of companies, the government of India has a corporate tax rate of 22%. I hope you understand this. For set of companies, government of India has a corporate tax rate of 22%, which means, let's say, company A earns a profit of 100 crore rupees and company B earns a profit of 1000 crore rupees. Now, the tax rate which will be implemented for both of them will be same, 22%. Whatever is the amount of profit they are earning, that doesn't change. It will remain same, 22% itself. That is, company A will pay 22% of 100 crore rupees and company B will pay 22% of 1000 crore rupees. What if there is one more company which is earning 1 crore rupee profit? 22% of 1 crore rupee will be paid. So, irrespective of the tax base, I'll repeat the definition. Irrespective of the tax base, if you're paying the same percentage of taxes to the government, that is basically a proportional type of a taxation system. Proportional type of a taxation system. Right? Best example for this is corporate taxes in India. Corporate taxes in India are proportional in nature. That is, if you have 22%, whatever is your profit doesn't matter. Right? 22% of your profit you will pay to the government of India in the form of corporate taxes. Right? Any problem with any one of the three, please do let me know right now. Right? Progressive, regressive, and proportional. Idea is very simple. Progressive means more, right? The tax base, wider is the object under tax base, more taxes you will pay. Whereas regressive, wider, but very small percentage you will pay. And third one is proportional. Irrespective of your profit, you'll pay the same percentage to the government. Okay. Difference between 1 and 2. My dear, you're asking me difference between progressive and regressive. You tell me, is it not self-explanatory? In progressive, more the tax base, more taxes you will pay. Regressive, exactly opposite. Okay. Don't keep on asking these kind of questions. I hope you understand. I'm not discouraging you. But when I explain to you income taxes are progressive, these can differentiate between the taxpayers. If you're earning more income, you will pay more taxes. Did I not explain the same thing? That is the difference itself. Okay, done. Now, one more system of taxation, ad valorem and a specific taxes. Ad valorem and specific taxes. Now, what is this ad valorem? Ad valorem tax means a tax which is imposed on value. Value means a price, value of a product. Okay, ad valorem simply means it is a tax which is imposed on value of the product. For example, let's say I'm a manufacturer. I've manufactured this and I want to sell it in the market at 100 rupees. So government will impose a tax on the value of the product. Let's say 10% of 100 rupees. That will become how much? 100 rupee plus 10 rupee. Can I simply say the tax that has been imposed by the government here is on the value of the product? Let me know. The tax that has been imposed by the government, it is nothing but on the value of the product, right? So whenever the government will impose a tax on the value of the product, value means at what price you want to sell it in the market, that is called as the ad valorem taxes. Example for this is value added taxation. I'll show it later, please have patience. Excise duties, etc. Whereas on the other side, specific type of a tax. Specific types of taxes, understand this, these are also referred to as a per unit taxes. Why? Government will not impose on the value, that is the price of the product. No, in specific taxes, government will look at certain physical parameters such as what is the length of the product, what is the quantity of the product, what is the height of the product, etc. And on these physical parameters, government will impose the taxes. Any difficulty in understanding this? Please do let me know right now. I'll repeat it again. In ad valorem taxes, government will impose taxes on the value of the product. Let's say value of the product is 100. Government will impose tax on 100 rupee. Let's say value of the product is 120 rupees. Government will impose on the value of the commodity. Whereas in case of specific taxes, government will impose, right? Government will impose the taxes on certain characteristics, certain physical parameters, such as, for example, in case of India, right? How many of you know that taxes on the car, I've written it here, taxes on the car, right, depends on whether the length of the car is less than 4 meters or more than 4 meters. How many of you know this? One way the government will impose a tax on the car is based on the length of the car. If the length of the car is less than 4 meters, government will have one taxes on that. And if the length of the car goes beyond 4 meters, then the taxes will also change. Right? Can I say length is nothing but a parameter here? Is it okay? Length is nothing but a physical parameter. Can I give you one more example? Think of it and let me know. Government of India. The government of India imposes taxes on petrol per liter. I'll repeat the statement here. Government of India imposes taxes on the petrol per liter. Government of India imposes taxes on diesel per liter. That is, whatever could be the price of petrol and diesel, doesn't matter. If government of India says 10 rupees per liter, right, don't you think this is a tax based on quantity of a product? Any problem with this? And I'll give you third example. Don't write this. Cigarettes. Cigarettes. right? The smokers will understand the pain. Cigarettes. As the length of the cigarette will keep on changing, the tax imposed by the government will also keep on changing. Higher the length of the cigarette, more taxes will be imposed by the government. Now, please tell me, when government will impose the taxes per liter of petrol, length of the car, length of the cigarettes, right? Don't you think whatever is the value of the product, that doesn't matter. Government is imposing tax on physical characteristic of a product, physical parameters of a product. Such taxes are referred to as specific taxes. Such taxes are referred to as specific taxes. Any difficulty? Any difficulty in understanding what is ad valorem and what is specific taxes? Can I go forward now? Can I go forward? Many of you are asking, sir, VAT. Please understand, today we do not have a separate VAT. We do not have a separate excise tax for many of the products. VAT, excise, sales tax, all of them have been brought under GST now, goods and services tax. And that's the reason GST is so important for you. We'll discuss that, don't worry. Any other difficulty? Can we go forward? If nobody will answer to my question, I'll assume you've understood and then I will go forward. Ad valorem, I'll repeat it again, based on the value of the product. My dear, how difficult is this? Understand this. I have produced this remote control. I want to sell it in the market at 100 rupee. Can I call 100 rupee as the value of the product? At least tell me now. Can I call this 100 rupee as a value of the product? So government will impose taxes on 100 rupee. So when government will impose taxes on value, that is ad valorem. And if government will impose the tax on length of the remote control, what is the length of the remote control? On that government will impose taxes. That is called as specific. Right? So in case of petrol, diesel, specific by the central government. In case of cigarettes, specific. In case of car, based on less than 4 meters, more than 4 meters, right? That is specific. Whereas in case of ad valorem, on the value. Now, before I go forward, please remember this. Rather than having specific taxes, what economists say is, it is better to have more and more products are taxed under ad valorem. I'll repeat the statement here. Rather than imposing taxes on rather than imposing taxes in the form of specific taxes, you should have more and more ad valorem taxes. Why? Ad valorem will provide you certain flexibility. Ad valorem taxes will provide you certain flexibility which is not available in specific taxes. What is that flexibility I'm talking about? Let me explain this. I'll take the product here. Let's say remote control, or let's say remote control. Now let's assume two types of taxation systems. Let's assume the value is 100 rupees. The value is 100 rupees. And in one case, that is a specific tax, government will impose a tax on the length of the remote control. And in case of the ad valorem, government will impose taxes on, right, the value of the product. Right? Let's say hypothetically, the length of the remote control is this much. Length does not change. Government will impose a tax of 20 rupees, assuming length is 1 meter. Which means now the price will be how much? 120 rupees. On the other hand, in case of ad valorem, what if, right, understand this carefully. Imagine the tax rate is 20%. Now, right now it will be how much? 100 rupee plus 20 rupee, 120 rupee. What if for any reason, the value, that is the price of the remote control goes up. Length does not change. Length remains the same. Price of the remote control goes up. From 100 rupee, it will become, let's say, 120 rupees. Now you calculate 20% of 120 will become how much? 24 rupees, which will increase the market price to 144 rupees. And on the other side, let's say from 100 rupee it will become 120. Length does not change. Government will have same 20 rupee tax. It will become 140. Now please tell me, in this case, that is ad valorem, Government, in order to reduce the burden on the people, can it reduce the tax rate and ensure it is collecting the same amount of taxes that it collected earlier? I will repeat the statement. Think of it and let me know. Under ad valorem taxes, I am asking you, can Government of India reduce the taxes in order to ensure that the market price will not become a burden for the people and still collect same amount of taxes as it did earlier? That is what I'm saying is, instead of 20%, some of you are saying no. Let me prove it, because it is correct. Let me prove it. Instead of 20%, when the value of this product becomes 120 rupees, can government impose, let's say, 16% tax? Think of it. Can government reduce the tax rate from 20% to 16%, right? Or let's say 17%, before you start accusing me, sir, right, a loss is there, etc., etc., which is nothing but, if you reduce from 20% to 17%, now you will be collecting how much? 20 rupee 40 paisa tax. All of you will agree? You'll be collecting around 20 rupee tax. Rather than, right, making the market price to go up to 144, now you'll be keeping at 140 rupees 40 paisa, which means, right, think of it, you are reducing the tax rate, but you are not foregoing the tax revenue. I hope you understand my point here. You're reducing the tax rate, but you're not foregoing, you're not losing tax revenue. You'll still collect 20 rupees as you collected earlier. But do you have a flexibility in this case? Right? Do you have a flexibility to reduce the tax rate, still collect same amount of tax rate, and also ensure market prices will not increase? Is this flexibility available in ad valorem? Let me know now. Is this kind of a flexibility available in ad valorem? Yes. This flexibility is not available in specific taxes. I hope you understand my point. This kind of flexibility is not available in specific, because you're deciding based on the quantity. Here you are deciding based on the value. Now let me add one more current affairs point here. Right? Let me add one more current affairs point. Right? That is basically pricing of petrol and diesel. Very, very important. Lot of the times this is there in the current affairs in India. Pricing of petrol and diesel in India. Point number one, yesterday itself I've told you, around 85% of the demand for oil in India, we import it. And now, right, this majority of this crude oil we import from Russia. But next important points are there. Follow this very carefully. There are three oil companies in India. Okay, there are three oil companies, government owned oil companies. We call them as OMCs, oil marketing companies. Okay, what are these three oil marketing companies? One is Indian Oil, then there is a BP, then there is HP, right? IO, BP and HP. There are three oil marketing companies in India which are owned by government, and majority of the oil that is supplied in India is done by all the three itself, right? And majorly done by Indian Oil Corporation. Now, when I say oil is imported into India, don't you think whatever is the international price of the oil, I hope you understand, whatever is the international price of the oil, that should dictate what is the oil prices, that is petrol and diesel prices in India. Think of it. I'll repeat the statement by the way. Whatever is the international price of the crude oil, that should dictate in the sense that should decide what is the petrol price in India and what is the diesel price in India. All of you will agree? But in reality, that does not happen. In reality, this doesn't happen in India. Why? I'll prove it. Whenever, understand this carefully, whenever the market price of the oil is decided, this is how the pricing is decided. What is the import price plus refining cost? All of you understand the term refining? Refining means you have crude, you will basically separate the components in the crude, right? I hope remember, you know, in your high school you must have come across this fractional distillation. Yes or no? In chemistry classes or any other classes, you would have come across the concept of fractional distillation. And UPC is not going to ask you to draw this picture, don't worry. That is, you will put the crude oil here at various temperatures. At various temperatures, you will keep on getting the output. And this is a concept of refining of crude oil. This is a refining. You will get petrol, diesel, kerosene, aviation turbine fuel, naphtha, etc. etc. This is called as a refining. So we import crude oil, we refine it, and we also export refined versions. We also export refined products to the international market. Please remember that. So next point, in case of India, whenever you decide the market price of the product, whenever you want to decide the market price of the product, you will decide it like this. First, the cost of importing, then the price of refining, then, right, the dealer margin. The dealer margin. What is the dealer margin? That is basically the margin that will be added by petrol bunks. And then there is a central government tax. Then there is a central government tax. And then there is a state government tax. And after that, you will arrive at market prices. After all of this, you will arrive at market price. Now look at the beauty of the system and don't make the argument political. Every government does it. The beauty of the system is, imagine, I'll just throw arbitrary numbers. Imagine right now importing price is, let's say, 20 rupees. Right now, okay, importing price is 20. Refining margin, etc., another 10 rupees. Dealer margin is 5 rupees. Central government tax, let's say, another 15 rupees. And state government, from one state to another state, it will keep on varying. But let's put an arbitrary number, let's say 10 rupees. So what should be the market price? If you take all of this, what should be the market price? Market price should be 10, 20, 30, another 20, 50, plus 10, 60 rupees. This should be the market price. But what happens in reality? What happens in reality in case of India is very simple. If the price of the international crude oil falls from 20 rupees to 10 rupees, if it will fall from 20 rupees to 10 rupees, ideally, if nothing else changes, what should happen to this? This should fall down to 50. All of you agree? Simple calculations. I'm not taking any right decimals. I'm not taking odd numbers. I'm taking very nice fives and tens. So if the price will fall from 20 rupees to 10 rupee, right, this market price of the fuel should also automatically come down to 50 rupee. Does it happen in India? No, it doesn't happen in India. Why? I'll tell you. What the central government and state governments do is, central government will increase their tax from 15 rupees to 18 rupees. Right? Central government will increase their tax, let's say, from 15 rupees to 18 rupees. And the states will also increase their tax from, let's say, 10 rupees to 12 rupees. If they do that, now look at the calculation. Please look at the calculation. Ideally, it should have come down to 50 rupees. 10 plus 10, 20. 20 plus, right, that will be 30 here, 50. 50 plus 5, 55 rupees. It has come down to what? 55 rupees, mind you. So which should be 50 rupees? Now it is 55 rupees. Now can I make two observations? Can I make two observations in this? First observation. Though the international prices have fallen down, the government taxes collected on fuels has increased. Let me know whether I'm correct or wrong. The international crude oil prices have fallen down. First observation is, government collection of tax revenues has increased. Correct or wrong? Please reply so that I know that you are able to understand. Second observation, the international prices have fallen by 10 rupees. In terms of rupees, they have fallen down by 10 rupees. The market prices have not come down by 10 rupees, but only by 5 rupees, which means the complete benefit of rate reduction is not given to customers. Is it okay? The complete benefit of rate reduction is not transferred to customers. Right? This is the second observation. This is also correct. And this happens under every government in India. Right? Whether the political party is A, B, C, D, doesn't matter. This has been done by all the governments in India. All the governments use it. Why? Please understand, there is a theory behind it. Why they do? There is a theory behind it. If the price is either 60 rupees, 62 rupees, 50 rupees, 55 rupees, don't you think the demand for the petrol will almost remain inelastic? Is the logic okay? I'll repeat the statement again. Whether the price is 60, 65, 70, 100, 110 or 70 rupees, 75 rupees, the price for the the demand for the petrol will almost remain. I'm not saying perfect, almost remain inelastic, which means government knows whether the price is 100 or 120 or 130 or 90 rupees, you people will purchase petrol, I will purchase petrol. So they will increase the tax component, they will collect a lot of revenues, we will have to pay for it. That is basically the argument. But on the other hand, look at the beauty. On the other hand, if the international crude oil prices will increase from 20 rupees to 30 rupees, the oil marketing companies will not hesitate, increase the price to 70 rupees. Simple. Right? If the international crude oil prices will increase from 20 rupees to 30 rupees, OMCs will never hesitate. They will increase the price from 60 rupees to 70 rupees, which means either ways, common man will always feel the burden of taxation on fuels. In fact, remember this. Historically, if you see, in India, if you pay 100 rupees for a petrol, a liter of petrol, if you pay 100 rupees, more than 60 rupees, that you have paid, it is because of the taxation. Is it okay? And this is a problem with import dependence. I hope you understand. This is a problem with having import dependence. And again, please understand the next point here. Government of India, in order to reduce the import dependence, we are taking so many measures now. For example, we are promoting consumption of electric vehicles. All of you will agree with me? We are promoting consumption of electric vehicles. We are promoting other modes of transportation. We are entering into tie-up with many countries, right, wherein we will be able to import at a cheaper price into India, etc. So these are certain important points. Please remember this. Please remember this concept. Why? The argument is simple here in terms of economics. In terms of economics. Point number one, there's a concept of deregulation. There's a concept of deregulation, right, in case of fuel prices. What do you mean by deregulation? Until 2010, Government of India used to decide the market price of fuels through various policies. They used to decide the market price of the fuels. But post 2010, both petrol and diesel pricing has been deregulated. Pricing has been deregulated. Deregulated means what? Today, government doesn't decide the market price. Rather, oil marketing companies, based on whatever is the international price, every day the market prices are decided. And the system that we are following is a concept called as daily dynamic pricing. Daily dynamic pricing. Daily dynamic pricing. What do you mean by daily dynamic pricing? Based on the value, based on the price of the crude in the international market on everyday basis, day-to-day basis, pricing will be adjusted by oil marketing companies in India. This is called as a daily dynamic pricing. But on one side, we are saying daily dynamic pricing, but on the second side, can I also say, even today, look at the example and tell me, even today, don't you think Government of India plays a very dominant role in what is the market price of the fuel? Think of it and let me know. Look at the picture, think of it and let me know the answer. I'm saying, even though we have deregulated the market prices of petrol and diesel, even today, the governments, central government and state government will play a very, very dominant role in deciding what is the market price of the fuels in India. Both will play the role, center as well as the state, because both of them will impose and collect a lot of taxes from fuels. And there is a second very important economic angle related to this. That is the idea of a cessus. right? Fuel cess, etc., etc. We'll discuss cesses later. Please don't worry. We'll discuss about cesses later. We will understand what you mean by cess, why it is relevant, etc., etc. Now, why I'm discussing all of this, right? Understand this carefully. In case of India, the central government imposes specific tax on fuels. I'll repeat the statement. In case of India, the center imposes specific tax on the fuels, whereas the state governments impose sales tax on the fuels. Sales tax is a type of ad valorem tax, whereas specific taxes are basically right per unit taxes. That is, if you purchase 1 liter, right, government will impose, let's say, 10 rupees. That will remain fixed. If you purchase 2 liters, 20 rupees. If you purchase 3 liters, 30 rupees. 4 liter, 40 rupees, etc. Whereas the state governments, right, impose as a percentage of the value of the fuel. Whatever is the value, as a percentage of that, states will impose a tax. So states impose, right, ad valorem, whereas the central government imposes specific taxes on the fuels. Can I go forward? Right, based on this, can you see the real life applications of the taxes ad valorem as well as specific taxes? Can I go forward now? And suddenly UPSC can throw a question at you people based on this only. Right, although I don't expect UPSC to ask such questions, but anyways, right, let me know whether this is possible. Possible. I'm not saying guaranteed. Possible. Though there is a deregulation in fuel prices in India, there are various external and internal factors which dictate fuel market prices in India. Elaborate. 250 words. I'll repeat the question. The market prices for fuels have been deregulated, but the market prices are dictated by various internal as well as external factors. Elaborate. 250 words. Is this kind of question possible in UPSC mains? I'm talking about mains, right? Focus on mains, because you compared to prelims, mains is much more difficult if you ask me. Okay, done. Can I go to the next one here? Any doubt so far? Can I go to the next system? Can you repeat regressive taxes? My dear, if you have an income of, let's say, 1 lakh rupees, you go to the shop, purchase this, you will pay 10 rupee GST. 10 rupee divided by 1 lakh is a very, very small number. If I have an income of 1000 rupees, go to the shop and purchase this, I will also pay 10 rupee GST. 10 divided by 1000 is much, much larger number. So as a percentage of income, the indirect taxes are taking away large income from me, despite my income being much, much lower compared to you. Right? That is basically the idea of a regressive taxation. Okay. Let me go to the next one. Let me go to the next one. Types of taxation systems: surcharge and cess. Surcharge and cess. Now, what is this concept of a surcharge? What is the cess? Surcharge is an additional tax that is levied on existing taxes. The taxpayer is already paying certain amount of tax. In addition to that, they will be asked to pay more taxes. And this additional tax is called as a surcharge. Now, why is that there is an additional tax? Already we are paying taxes. Why is that there is an additional taxes? Let me give a very simple example. Imagine there are two people. A is earning 10 lakh rupees income and B is earning, let's say, 2 crore rupee income annually, by the way. Don't ask me, sir, is it daily? Is it monthly? For income taxes, annual income is more important. Okay, now A is earning 10 lakh rupees, B is earning 2 crore rupees. Rather than 10 lakh, let me make it 20 lakh. The tax rate, highest tax rate, which is applicable to A will be how much? 30%. And highest tax rate, which is applicable to B, will be how much? 30%. But please look at income of both of them. Can I say that B has more capacity to pay income taxes, Hence, in addition to 30%, I should be collecting additional taxes from B. I'll repeat it again. Let me know if you have any problem with this. I'm saying that there are two taxpayers, right? A and B. A is earning 20 lakh rupees. B is earning 2 crore rupees. Highest rate of taxation for both of them will be 30%. But based on the numbers, based on the income, can I say B has more capacity to pay taxes? Is the logic okay? B has more capability to pay more taxes to government. So what government is you are paying 30%. That is normal. You will have to pay. In addition to 30%, now I will impose one more tax to you. And this additional tax to the existing tax, this is called as a surcharge. This is nothing but a surcharge itself. Why does the government impose? Like multiple reasons. One reason is there is something called as a principle of a tax. Principles related to taxes. And one of the principles says if a person has more capacity to pay taxes, government should be collecting more taxes from the person. Is the logic okay with all of you? If the person has more capacity to pay taxes, collect more taxes from the person. Rather than uniformly imposing taxes, collect more taxes. That is the reason I gave you an example of the progressive, regressive, and proportional, direct taxes and indirect taxes. Now, please tell me, if government is collecting 100 rupee tax, which is basically sum of direct taxes and indirect taxes, which one do you think should be more? Out of 100 rupee, you want the government to collect more of a direct taxes or more of indirect taxes? Think of it and let me know. Right, between this 100 rupee, out of this 100 rupee, how much should be more? Should the direct taxes be more or should the indirect taxes be more? Always remember, the direct taxes should be more compared to indirect taxes. That is ideal, that is preferable. That is not the situation in India, right? That is because the direct taxes can differentiate between the taxpayers. They can say this person is earning more, I will collect. Right? This person is earning less, I'll collect lesser. Whereas indirect taxes does not make any distinguishing. Indirect taxes doesn't differentiate. So out of the total amount of taxes that you collect, what is preferable, what is ideal is that direct taxes should be more. Whereas in case of India, remember this, in case of India, out of 100 rupee that is collected, generally it is the indirect taxes which is more. More than 50% of the total taxes collected are indirect in nature, and less than 50% are direct in nature, which means we are imposing more and more indirect taxes, which does not differentiate between the taxpayer, and we are collecting more amount of that. Right? That is the reason there are a lot of reforms which are said to be done in case of direct taxes itself. We should be collecting more from the direct taxes. Okay. Now, please have a look at this surcharge. Right? That is the reason I'm saying government will impose surcharge. Right? That's the reason I'm saying government will impose and collect more surcharge, because again, can I say surcharge is nothing but a type of progressive taxation. Think of it. Surcharge is nothing but a type of progressive taxation. If your income goes to 5 crore rupees, now you will pay more taxes in the form of surcharges, which is nothing but again a progressive taxation itself. So argument is simple here. Government will impose additional tax to the existing tax. And this additional tax, because government says there is more capacity to pay taxes. Government says, right, because the person is crossing certain threshold, crossing certain level, right, he has more capacity, the person has to pay more taxes, and that is called as a surcharge. Right? Surcharges are usually permanent in nature. Permanent in the sense, once they are imposed, government will continue to implement them. Right? Government doesn't withdraw them. Right? That is a permanent in nature meaning. This is calculated in terms of percentages of income taxes paid. Let me give a very simple example. Let's say hypothetically, surcharge is 20%. Right? Very often you'll come across the term surcharge whenever government announces a budget. In the budget, government will also announce a surcharge policy. If government says surcharge is 20%, how do they calculate the surcharge? How do they actually add the surcharge and collect it? If a person pays 1 lakh rupee income tax, I'll repeat the statement. If a person is paying 1 lakh rupee income tax, if the surcharge is 20%, they'll simply calculate it as 20% of the income. Income tax. They'll simply calculate this as 20% of the income taxes. Right, so it is always calculated in terms of percentages of income taxes paid. Right, so the revenues earned by the center through surcharge is retained by the center and not distributed to the states. Right, I'll come to this, just give me a minute. Now, what is a cess? What do you mean by cess here? Cess is also a tax imposed by the government. Right, it is also a tax imposed by the government, but to achieve specific objective. This is important. To achieve a specific objective. So what do you mean by specific objective? I'll give you a name of a cess. You tell me what is the objective. Krishi Kalyana cess. Please tell me. The government of India had imposed a cess by the name of Krishi Kalyana cess. So the government will impose and collect certain amount of taxes in the form of Krishi Kalyana cess. For what purpose do you think government will use it? Can government use this to construct a port? Can government use this, right, to provide welfare for right poor people? No. Government has to use this to promote agriculture welfare, agriculture sector. Right, now I hope you understand what is the meaning of a specific purpose. Right, I'll give you one more example. Swachh Bharat cess. Earlier, there was a cess by the name of Swachh Bharat cess. Don't you think whatever money is collected by imposing Swachh Bharat cess has to be used only for promotion of sanitation? That is basically under Swachh Bharat. Right? Anything related to right the Swachh Bharat Abhiyan of Government of India, money will be used there. I'll give you one more, the most important and applicable even today, the health and education cess. Health and education cess. Even today, health and education cess is applicable. Now, when you say health and education cess, for what purpose the cess will be used? For the promotion of healthcare, for the promotion of education. But don't you think, if you want to implement something by the name of, let's say, healthcare cess, can you keep on implementing till perpetuity? Don't you think whatever objectives you want to achieve, if you have achieved those objectives, government might withdraw the cess? Yes or no? Right, I'll give you one more example. Right, I'll give you one more example. There is a cess, right? If you have read the newspaper, this was there in the newspaper. There's a cess by the name of GST compensation cess. There's a cess by the name of GST compensation cess. Now we'll understand what is this GST compensation later, don't worry. But idea is very simple. There is a concept of compensation under GST, and to pay for the compensation only for that purpose, the cess will be collected. If you achieve that objective, then what is the use of this cess? So that is the reason the difference between the surcharge and cess is that surcharges are permanent in nature, because people will keep on earning more and more income in India. Right, so that surcharge is permanent, whereas cesses are implemented for specific objectives. If you meet the objective, that right, a cess can be withdrawn. So some of the cesses are imposed as a percentage of the value, and in some cases it is imposed right and in absolute numbers, that is 50 rupees, 60 rupees, in some cases 5%, 10%. So some in terms of percentages, some in terms of right absolute values. And third point, it is same for right surcharge and cess. Proceeds from cesses at first are collected in the consolidated fund of India and then transferred to the dedicated fund for that cess. What do you mean by that? Let me talk about these 2 points now. Follow this very carefully. I'll introduce one more concept to you. All of you know there is a Constitution of India. Anybody who says, sir, what is this Constitution? I've never heard of it. There is a Constitution of India. And under the Constitution of India, what we have done is, we have divided the powers between the central government as well as state government. And when you study the polity, when you come across polity lectures, you will come across this. There is one schedule in the Constitution of India by the name of Schedule 7. Again, please do not ask me about Schedule 7. I will not discuss polity. I'm not the faculty for that. Understand the logic. There is one part of Indian Constitution, Schedule 7. And under Schedule 7, what we have done is, we have divided the powers between the central government as well as state government. And one such power that we have divided is the power of taxation. We have divided the powers of taxation between central government as well as state government. And remember the next point, very, very important taxes have been given to central government. Is it okay? Right? Very, very important taxes have been given to central government. And very important taxes, I mean pan-India taxes. Pan-India taxes. What do you mean by pan-India? Throughout India. Can I give an example? Please tell me, income taxes are imposed throughout India or not? Please do let me know. Income taxes are imposed and collected throughout India or not? Or you think income taxes are imposed only in the state of Uttar Pradesh? They are imposed only in the state of Gujarat? Absolutely no. What about corporate taxes? What about corporate taxes? Corporate taxes are also imposed and collected throughout India. So all I'm trying to convey to you people is, very, very important taxes, powers have been given to central government. That's a fact. Now, look at the second point. I'll ask you a question now. Central government will impose and collect income tax, corporate tax, customs duties, etc., etc. Do you think only the central government should be allowed to use all of this money? Let me know. Do you think only the central government should be allowed to use all of this money? No. What about the state governments? From where do you think the state governments will get the money then? That is the reason there is a concept of finance commission. There is this concept of finance commission. Finance commission is a constitutional authority, right? We set up finance commission under Article 280. Next week, I'll have a detailed discussion on finance commission, right? Again, economic perspective, what is the importance of finance commission, how do they recommend, etc., etc. I will tell you about finance commission, don't worry. So we set up a finance commission under Article 280 of Indian Constitution. Now, what is the role, important role of a finance commission? Right, follow this very carefully. Central government will impose and collect a lot of these taxes. All of these taxes will be kept in a fund called as Central Divisible Pool. Is it okay? Let me know. All of these taxes which are imposed, right, imposed and collected by the central government are accumulated, are kept in a fund called as Central Divisible Pool. From the Central Divisible Pool, Finance Commission will recommend how much money should be going to the central government, how much money should be going to the states. Any difficulty here? From the Central Divisible Pool, it is the Finance Commission which will recommend to the Government of India how much money should go to the central government, how much money should be going to the states. Now, while I'm discussing all of this, central government will impose cess and collect cess. Central government will impose and collect surcharge. This is the point. The cess and surcharge collected by the central government is not distributed. I'll repeat the statement. The cesses and surcharges collected by the government, right? The central government will not put it in the central divisible pool. That will not be distributed between the center as well as the states. Which means, I'll throw an arbitrary number. Imagine government of India has collected, let's say, 100 crore rupees in the form of a cess and surcharge, all of this 100 crore will go to the central government. Central government will decide whether I want to give part of it to the states or not. If central government says, okay, I will give, let's say 20% of it to the states, that can be done. If the central government says, I will not give anything out of this to the states, states cannot demand it. States simply cannot demand it. That is the beauty of the cesses and the surcharges. And this is also there in the current affairs. Why? I'll tell you. Please understand this very carefully. You know that cesses and surcharges will not go to the states. The central government doesn't give it. All of it, they will take it. Except in certain circumstances, for example, GST compensation cess, which I'll discuss later. Now think of it very carefully and tell me, imagine a product price is 100 rupee. Selling price is 100. Right now, indirect tax on this is a 10 rupee. Now government wants to increase the taxes from 10 rupee to 12 rupee. Can the government do it this way? 100 rupee plus 10 rupee plus 2 rupee cess. Please tell me what is the difference between the equation 1 and equation 2. If this is right a type of let's say indirect tax such as GST, this is also type of indirect tax, that is GST. In equation 1 there's a cess of 2 rupee, and in equation 2 the tax itself has been increased to 12 rupees. Now can I simply say the difference between equation 1 and equation 2 is, in equation 2 12 rupee will go to the states, that is a division. After division, part of 12 rupee will go to the state, whereas here in the first equation only 10 rupee will be divided between center and state, and 2 rupee will go to central government directly. Now you tell me, if you are the chief minister of the state government, would you prefer equation 1 or equation 2? I'll repeat the statement. If you are the chief minister of the state government, would you prefer equation 1 or equation 2? You should demand 2. You should demand the second situation. You should not demand the first situation. Why? In the first situation, taxes have been collected more. But, right, out of whatever is the excess tax, you will not get even a single rupee out of it. State will not get anything. Center will take away the cess tax. Whereas in the second case, more taxes have been collected, you will get part of it. How much you will understand later when I discuss GST, don't worry. Now check in the last couple of months what has been the argument of West Bengal government, what has been the argument of Tamil Nadu government, what has been the argument of Kerala government. Please check, right? In the last couple of months, the chief ministers, the finance ministers or revenue ministers of all of these states are criticizing the central government, saying that central government has imposed more taxes, but we are not getting the benefit of that for a simple reason. The extra tax that is being collected by the central government is in the form of cesses. It is in the form of cesses. And when they collect in the form of cesses, we don't get anything out of it. Right? Central government will take away all the cesses to itself. Done? I hope you understand what is the importance of cesses and surcharges, what is the problem, why there's a criticism, right? What is the role of the Finance Commission here, etc. Again, I know I've not completed Finance Commission. We'll discuss it separately, don't worry. Can I go forward now? Can I go forward? And we'll take the break after this. Some of you are asking break, etc. We'll take the break after this, don't worry. Health and education cess is in percentage or in absolute terms? It is in percentages. Right? It is in percentages. Generally, they will impose 4%. Health and education cess. Although I'm using the term education cess, it is a higher education cess. Higher education cess. 4%, 3% plus 1%. Okay, done. Next, one more set of taxation system. After this, we'll take the break. But this is the assignment to you people. Do you remember yesterday I told you to observe one of the article in Hindu newspaper? Let me know whether I've told this or not. I'm sure I've told you this. That is, there was one article in the Hindu newspaper in the business page. That too, it was in the bottom left column like this. Bottom left, not exactly to the corner, above like this. Bottom left. There was one article that is right based on steel imports from China. Right, countervailing duties on the steel imports from China. Have you people checked that article? Let me know. Let me see whether I'm the only person who is reading newspaper or you are also reading newspapers. Right? Was the article there or not? If you have not checked it, please check it after this at least. Now, what is the argument? There are three types of taxes, additional taxes, mind you, that we can impose on the imports. Right? And these three are called as countervailing duties, right? Safeguard duties, and anti-dumping duties. Now, let me start with the picture. Very nice picture with color coding I've given. First and foremost, all the three types of taxes are different. After I explain all the three, please don't say all the three are same, which means you're not listening to me correctly. All the three are different. Please observe in what situation the types of taxes are imposed. You will realize, okay, A is different from B, B is different from C. Let me explain. Let me start with anti-dumping. Let's say I'm a manufacturer in China. Okay, I'm a manufacturer of a product in China. I'm manufacturing this remote control. Now, I will sell this remote control to other parts of the world. In other countries, I will sell it at 100 rupees. But when I will export this remote control to India, I will export it at 80 rupees. All of you follow the argument here? I will export this remote control to other parts, other countries at 100 and to India at 80 rupees. Can I call this as suppressed pricing? Can I call this as suppressed prices? Let me know. Right? To other markets 100, to India at 80 rupees. I'm suppressing the price and I'm exporting to India. Now, many of you will ask me, sir, why are you doing it? What is the point? Why do you want to suppress the price? Simple argument. In India, there are many manufacturers who are manufacturing a similar product. Their prices are above 80 rupees. Their prices are above 80. So I will suppress my price to 80. I will export to India. Now, because of prices which have been suppressed, please tell me what will happen to the demand for my product in India. What will happen to the demand for this remote control? Demand will be very high. And what will happen to the demand for products manufactured by other companies in India? The domestic manufacturers will suffer. I'll be able to sell more. This is called as dumping. All of you will agree with the statement now? This is called as dumping. Dumping activity. That is, at suppressed prices, I will export the product to one country. The reason that I do is I want to increase my sales. I want to reduce the sales of others. But please understand, how am I able to do that? How is that possible? If I sell it at 100 rupees, that will not be possible. So what I'll do, I will suppress my prices. This is called as dumping. Should Government of India allow this to continue? Answer now. Should Government of India allow this to continue in India? No, we should not allow it. Don't you think dumping is bad for India? That is the reason government will identify those products which are getting dumped in India and impose a tax. Look at the name of the tax now, anti-dumping duty. Right? Government will impose more taxes on this. Right? This is called as anti-dumping duty. And if more taxes are imposed, what will happen to the market price of the remote control when it is entering in Indian market? The market prices, because of higher taxes, automatically will go up. Right? So that is basically the objective of anti-dumping duty. Done? This is the first one. Let me go to the second one, countervailing duty. Now I'll take the same example. I'm manufacturing this remote. I want to sell it at 100 rupees. I want to sell it at 100 rupees. Not only in India, but everywhere else. But my government will give me a subsidy of 20 rupees. So I hope you understand the difference between first and second now. I want to export this to India at 100 rupees only. But the Chinese government will give me a subsidy of 20 rupees. Now please, I hope you remember this. Let me know if government of the China will give me a subsidy of 20 rupees, will I sell it at 100 rupees or 80 rupees? Let me know. If Chinese government will give me a subsidy of 20 rupees, don't you think I will reduce my prices to 80 rupees? Now, I will export this product at 80 rupees to India. And please understand, I'm not dumping now. I want to sell it at 100 only. But government of China is giving me 20 rupees. So to India, I will export it at 80. To USA, I will export it at 80. And I will sell the same product, right, to even Germany at 80 rupees. Because China is giving me 20 rupees subsidy. But the problem now is simple. In India, if I export it at 80 rupees, don't you think the same problem will exist? That is, domestic manufacturers, their revenues will go down, right? And I'm able to sell it. Done. I'm able to sell it at more. I'm basically selling in more quantities in India. Now, please tell me, will government of India sit quietly with this? Let me know. Will government of India, right, be very happy with this situation that Chinese government is giving subsidy and right, the government of India will be happy with that? No. So what government of India will do? Government will impose additional taxes on this product when it will enter India, and that tax is called as countervailing duty. That tax is referred to as countervailing duty. Can I call it as one more name? Can I call it by one more name? Anti-subsidy duty. There is one more name for this, anti-subsidy duty. All of you understand this? Right? This is basically a government imposing additional tax on a product which is imported because my government, where I'm manufacturing, my government is giving me subsidy. That is the reason government of India, in order to protect its domestic manufacturing, will impose additional taxes on this product. It is called as anti-subsidy duty. So first one is anti-dumping, second one is countervailing, which is anti-subsidy. Third one is safeguard duty. Third one is safeguard duty. Now, what is this safeguard duty? Let me explain. Imagine I'm a manufacturer in China. Understand this carefully. I'm a manufacturer in China. We have introduced a new type of a technology, right? There is a new type of technology available for me. Labor cost is very, very cheap. Raw materials is also available at a cheaper cost. Now, I will use all of them: cheaper technology, cheaper labor, cheaper raw material, and I will manufacture this product. Now, don't you think, understand this carefully, don't you think the price of the product will be competitive, will be cheaper compared to what is produced in India? I'll repeat the process here, right? I hope you understand. I'll repeat the process, right? I'm a manufacturer in China. I am able to get better technology, cheaper technology. I'm able to get, right, basically cheaper raw materials, cheaper labor. And using all of this, I'll be able to manufacture this product automatically at cheaper prices. Now, I will export this to India. I will export this to India. Now, tell me, don't you think because this product is cheaper, this import of the product into India will automatically start increasing? Let me know. Because this is cheaper, will it not automatically start increasing in India? And when it automatically increases, what will happen to domestic manufacturers? The domestic manufacturers will be affected. The domestic manufacturers will be affected. Right? Now, will the government of India keep quiet? No. Government of India will look at the situation and say that, okay, Because the imports are suddenly increasing in India. Because the imports are suddenly increasing in India, that is harming my domestic market. That is affecting my domestic manufacturers. Right? And have a look at this. To address this issue, to protect the domestic manufacturers, right, the government will impose a tax which is called as a safeguard duty. Right? This is called as a safeguard duty. Okay, so these are the three types of taxes. Please be very careful. All the three are different. In the first one, dumping activity is there. To protect manufacturing, government will impose additional tax. In second one, countervailing duty, government, right, that is exporting government is giving subsidies. Right? It is giving subsidies to the manufacturers in order to protect the companies. In India, the government will impose countervailing duty. And the third one is a safeguard duties. That is basically there is a sudden rise in the imports. Nothing, no subsidy, nothing. Sudden rise in the imports, and in order to protect the domestic manufacturing, the government will impose a tax which is called as a safeguard duty. Okay, so these are the three types of duties. Please be very careful. These right basically are appearing in the newspaper very often. Okay, these are very often appearing in the newspaper. For example, yesterday's newspaper, that is a Hindu newspaper, if you've read, there is this article regarding anti-subsidy duty or countervailing duty. That the government of India, that is a finance ministry, there is a proposal which has come to the finance ministry by one authority, that is DGTR, Director General of Trade Remedies. DGTR simply stands for Directorate General of Trade Remedies. The DGTR has sent a report to, right, the finance ministry saying that the steel imports into India have increased. They are getting subsidies from the government. So please impose anti-subsidy duty. That is countervailing duty. And the finance ministry, in another newspaper, it was not reported in Hindu, but in another newspaper, in finance ministry, right, they are saying that no, we might not impose the anti-subsidy duty, because argument of the finance ministry is that if I impose anti-subsidy duty, that is additional duties, automatically the taxes that will be paid by the importer will go up. And because the taxes paid by the importer will go up, right, the market prices, right, when whichever product this will be used, the market prices will also go up, which will basically be a burden for common man, which will become a burden for consumers in the market. Citing that, right, the finance minister stated they are not inclined to impose anti-subsidy duties or countervailing duties on the product. Done? Right, so this is basically anti-dumping, countervailing, and a safeguard duty. Now, please read that article, Hindu newspaper article. You please read it. Now you'll understand in a better way. Shall we go forward? Shall we go forward here? Right, so this is a discussion regarding types of taxation systems. If there is any issue, any kind of a doubt regarding these kinds of taxation systems, please do let me know. Otherwise, we'll go forward. Countervailing duty, I'll repeat it again. My dear, listen to when I say this. Right, you want me to explain the whole things in detail, again repeat. That takes a lot of time. Listen carefully. I'm manufacturing this and I'm getting subsidy from the government. And if I get the subsidy from the government, automatically I'll be selling at a lower price. And because I'm selling at a lower price, manufacturers in India would be affected. So government of India now knows that I'm able to sell it at lower price because I'm getting subsidy. Hence, government of India will impose additional tax on the product, which is called as anti-subsidy duties. Okay. Anything else? Any other doubts? Otherwise, we'll take the break now. Any other doubts? Case is going on in WTO regarding IT products. That's different. IT products case is different. We'll discuss when I take up WTO. Why surcharge is not proportional in nature as in case with increase in income, my dear. From one type of income, above 1 crore, surcharge rate is different. Above 2 crore, surcharge rate is different. Above 5 crore, surcharge rate is different. Okay. Proportional regressive tax are same? No, both are different. Don't worry. You want me to enter into optional papers? That is not required. In that case, I will have to explain to you what is marginal rate of taxation, what is average rate of taxation. Generally, the argument in optional papers is simple. In case of direct taxes, the average rate of taxation is smaller compared to marginal rate of taxation. In case of proportional, average rate and marginal rate will always be same. In case of regressive, in case of regressive rate of taxation, average rate is greater than the marginal rate of taxation. Right? That kind of differentiation is there, but for GS paper, all of that is not required. What is the use of specific tax? When they can put taxes on the basis of price of the products. For example, if they can put the tax on the car on the basis of its price, then why are they preferring it to physical attributes? My dear, there is a differentiation for a simple reason. Argument of government of India. I'll take a very simple example. Argument of government of India is, if you're going to purchase a car, a hatchback car. Have you heard of this? A hatchback car is used by a common man. A sedan, right? Sedan will be used by business class people. So obviously, when it is a sedan, by default, government of India wants to impose a higher rate of a tax, and that is the precise reason why we have a differentiation of sub 4 meters or more than 4 meters length of the cars. Direct tax differentiate based on taxpayers, then progressive is same. If any profit they earn, my dear, again that's the reason I'm saying there is this concept of marginal rate of taxation and average rate of taxation. I don't want to get into all of it. Simple understanding more than sufficient for UPSC. Okay, any other question you people have? Let me know. Any other question you people have, please do let me know, otherwise we'll take a break.
Hello.
Hello.
Yeah. Hello, sir. Good morning, sir. I had like two doubts.
Okay.
First one is related to inflation, sir. We saw that the demand pull inflation will increase when the money supply is more.
Hmm.
So, sir, what happens to like India is also trying to internationalize the rupee, and US is an international currency. Then a lot of money supply is in uh, all over the world.
Hmm.
Then how do they calculate inflation?
What is the connection between internationalization and inflation rate?
Because that money will keep coming and going from the country, so the supply will keep changing, right?
Hmm. Yeah, that will keep on changing.
So it will impact the inflation calculation. The supply
Of
will be
course, yes.
more.
That's a reason there is this idea. I would have discussed this under the concept of international trade, but since, anyways, you have asked, there is this idea of impossible trinity. Impossible trinity is a theory which says any country cannot achieve all the three things simultaneously. That is, you cannot have let's say, independent monetary policy, you cannot have a fixed exchange rate, and you cannot control the inflow of capital. That's the reason when you achieve internationalization of rupee, or you want to achieve internationalization of rupee, there is no independence in the monetary policy. Monetary policy will be affected. Interest rates will have to be changed, right? Because the capital will keep on coming into India. That will increase money supply, or go out of India, reduce money supply. That will be there. That's a
Okay.
simple connection. Okay.
Yes. And second thing, sir, I read in other countries internationally, they put some pressure on India for giving subsidies to farmers and all.
Okay.
So, and like they can do this, they can keep this duty, countervailing duty and all, na, instead of being angry about India giving subsidy to its farmers.
Okay. The concept of agriculture subsidy is very complicated. I'll discuss, right? There's a chapter by the name of subsidies, right? In the subsidies, I'll tell you how subsidies are classified, what is the argument of government of India, why they're giving subsidies, and what is the argument of other countries such as USA against government of India giving subsidies to farmers. It's not that easy. We have to discuss certain concepts. I can give you the answer, but the answer most of the students will not understand. I'll simply say, under WTO there is a agreement of agriculture under which, right, the amber box subsidy should not be more than 10%, etc., etc. It's a very complicated concept which most of the students will not understand today. So when I take up agriculture and subsidies, I'll definitely discuss how subsidies are classified, why government of India says this, why other countries say this, what is the role of WTO under that. Even then, if you have a doubt, please feel free to reach out to me. Okay.
Okay. Okay, sir. Thank you.
Nivedita, please pick up the call. Sachin, pick up the call. Generally, central government imports the fuel, so central government imposes the tax according to import and filtration charges. Then why should state collect taxes on fuel? If state again imports filtrated fuel in a state, no, my dear. Uh, Please understand, that is the reason. Next concept was that only. Please understand, the state government will also impose and collect a tax which is called as a sales tax. So central government will impose a tax and collect based on the production. Excise duty, it is on production. Whereas the state government will impose and collect taxes on sales of the fuels. So central government on production will impose a tax. States will impose a tax and collect on sales of the product. Right? That's the reason on fuels, both the center and the state will impose and collect taxes. Sudhir, please pick up the call. Can land tax be an example of specific taxation? Generally considered, yes. Because based on the quantity, land taxes, basically the taxes that we impose based on the size of the land, we generally impose and collect. Okay, that is the reason, land taxes. Cess and surcharges will be imposed only to collect a tax by the center instead of dividing the states. Yes, whether to give part of that to the states or not, it is entirely the prerogative of the central government. Right? There is no compulsion on the central government to divide the cesses between center and state. There is no compulsion. It is entirely left to the central government. Okay, done. Any other questions? What is producer price index? Producer price index, basically in other countries, right? In case of India, we are yet to develop a very good producer price index. In other countries, I'll write it in a separate slide here. A basic idea for producer price index is, and please understand, PPI, producer price index. We measure the inflation in the sense changes in the price level at the producer level. At the production level itself, we will try to measure what is the change in the price level of the commodity. That is called as a producer price index, right? And in case of India, we do not have a very well developed producer price index. Instead of that, we generally use a WPI, wholesale price index. How do they measure it? For example, imagine here is a producer. Producer is purchasing inputs and is providing certain, let's say, outputs. Right? The producer is purchasing certain inputs and selling certain outputs. Now, what is the price? What is the price change in the output that is sold by the producer? I'll repeat it. What is the change? What is the change in the price level at which the outputs are sold by the producer? That measurement is done, and that is called as producer price index, PPI, producer price index. Okay. Okay, done. Can we go forward? Okay, let's take a break now. Let's take a break. We will restart the session. Okay, we'll restart the session at around 12:14. We'll restart the session at 12:14. Please join back at 12:14. Okay, welcome back. Am I audible? Am I audible? Please do let me know so that we can continue with the discussion. Okay, so the next concept that I want to discuss is basically types of taxes here. So far, what we have discussed is taxation systems. Right, we have discussed types of taxation systems, the countervailing, right, ad valorem, right, the different types of taxation systems, a specific, right, etc. Now let me go ahead. Right, we'll be discussing different types of taxes now. Right, the most important tax, as far as I'm concerned, for UPSC for you will be the concept of GST. If you check the last 5 years question papers, you have got the questions on GST both in prelims as well as mains. So the concept of GST, as far as I'm concerned, is very, very important. But that doesn't mean that other types of taxes are not important or not relevant. But having said so, also, please understand this, there are more than 40 to 50 types of taxes and cesses in India. I hope you understand. There are more than 40 to 50 types of taxes and cesses in India. Do you need to study all the 40 to 50 types of taxes? Again, the argument will be no. Do not prepare for a chartered accountant exam. That is not your scope. That is not your requirement. What is your requirement? UPSC. For UPSC, what is relevant? What is important? Focus only on that now. Done? Okay, let me go ahead. Different types of taxes I'll discuss now. First one is income taxes. The first one is, right, the income tax. Now, what is this income tax? Please understand this. Whenever an individual or a company or a household, etc., earns a certain income, individual or a company or any other taxpayer earns a certain income, the government will impose an income tax on both of them and collect. Simple argument. For example, if I'm earning income, government will impose a tax on my income and collect certain tax. If a company is earning income, income is nothing but profit for a company. Is the argument okay? Right, for a company, income is nothing but profit. So for a company, when the profit is generated, on the profit also government will impose a tax and collect the tax. That is called as a corporate taxes. In case of India, the government of India has the right to impose income taxes as per the provisions under Income Tax Act of 1961. I repeat, in case of India, the government of India has the right to impose and collect income taxes as per the provisions of Income Tax Act of 1961. Now, under the Act of 1961, different types of the taxpayers, right? It could be the Hindu undivided family, it could be individuals, it could be a company, right? It could be a startup, etc., etc. All of them are covered under this. And for each one of the types of taxpayers, certain types of income taxes or rates are decided by the government, imposed and collected by the government. That is basically the concept of income tax. Now, whenever we impose our income tax on an individual such as you, such as me, for example, if I'm an individual making certain amount of income, government will impose a tax on me. If the government will impose a tax on me and collect it from my income, that is basically individual income taxes. And in case of individual income taxes, different rates are there. Right? There's a term called as IT slab. Have you come across this term? You should have come across this term. Again, is it required for UPSC? No. But why I'm saying you should have come across this term, the end of July, right? Those who are earning salaries, right? Those who are earning salaries, weekend classes, those who are attending, I'm pretty sure all of you know 31st July is the last date to file income taxes in India. 31st July is the last date to file income taxes. So basically, the idea is simple. Individuals will have to file income taxes. That is individual income tax. And what about the corporates? Even the companies, even the corporates, right? In case of India, they will have to pay corporate taxes, right? Basically, those companies which are earning profits now will have to pay taxes on this, which is called as a corporate taxes. The companies are paying taxes on their net income, nothing but the taxes. Okay. Now, in case of India, please understand this. There are different rates of corporate taxes. For some of the companies, the corporate tax rate applicable is 30%. For some of the companies, corporate tax rate applicable is 22%. And some of the companies, startups, which will start manufacturing within certain specific time period, the corporate tax rate applicable is 15%. But please understand, most of the companies pay corporate taxes at 30% as well as 22% in case of India. Earlier, there was only one rate of a tax, that was 30%. But government says there are two types of systems. Understand this. There are two types of systems. And there is one question, what is Hindu undivided family? It is a type of unit, right? In classification, there is one type of a unit, HUF, right? Don't worry about it, right? All these classifications not required for UPSC as such. So have a look at this. There is a concept of deductions. Now, what do you mean by deductions? Understand this very carefully. Let's say I'm earning a salary of 5 lakh rupees. My salary is how much? 5 lakh rupees. Point number one, government will not impose and collect taxes on full salary. Is it okay? I'll repeat it again. Government will not impose and collect taxes on full salary. They will not do that. Why? There is a section under the Income Tax Act of 1961, right? A section very famous, section 80C. For example, I'll give a very simple example. There is a type of investment facility available, PPF. Have you heard of this? Public Provident Fund, PPF, Public Provident Fund. Now, what is this Public Provident Fund? You will have to invest in a PPF. It's a type of investment opportunity. You can invest, but your money will be there with, let's say, the PPF authority for a period of 15 years. A very long-term investment vehicle. But what Government of India says is, if you make an investment in the PPF in a year, up to 1.5 lakh rupees, you can use it as a deduction. Let's take an arbitrary number, whatever the exact number, don't worry. UPSC is not going to ask you all these calculations. Let's say Government of India says, if you invest up to 1.5 lakh rupees, you can claim it as a deduction. In fact, there is a NPS also, right? National Pension Scheme, up to 50,000, you can claim deduction there also, right? So there are different types of investment vehicles which are available to you. Now, please understand this very carefully. What is my salary? 5 lakh rupees. Should Government of India impose and collect taxes on my full 5 lakh rupees? No. What government does is, this is how the calculation is done. Out of 5 lakh rupees, out of 5 lakh rupees, right, government will basically say 1.5 lakh that you have invested under section, let's say 80C, I will use it as a deduction. I will give you to you as a deduction, which means out of a salary of 5 lakh rupees, I'm not going to collect taxes on full 5 lakh. The taxable salary, right, or let's say the net salary will be how much? It will be 3.5 lakh rupees. The taxable salary or the net salary will be 3.5 lakh rupees. And now, out of 3.5 lakh, for first 2.5 lakh rupees, how much is the income tax? 0%. How much is the income tax? 0%. Which means finally you will have to pay how much? Salaries on this amount of salary, 1 lakh rupees, you will have to pay tax to the government. You'll have to pay tax to the government. That will be how much? Let's say 5%. Now, I hope you understand how the taxes are actually calculated on income. Anybody has a problem, please do let me know. Again, UPSC is not going to ask you this calculation, right? Remember this, UPSC is not going to ask you calculation. All you need to simply understand is deductions are provided. There are various provisions where you can use them as a deductions and reduce the taxable amount. Reduce the amount of salary on which tax is imposed. Automatically, the taxes that you will pay to the government will also come down. Any problem with this? Any problem with this? Please do let me know right now. Any problem? Otherwise, if nobody will reply, I'll go forward. I will simply go forward, assuming all of you have understood. Right? Basic idea that I want you to understand is deductions are provided. Deductions are provided. The taxable salary will come down. Now, the deductions are provided for all the taxpayers. For all the taxpayers, the deductions will be provided. Sir, will charity come under the deductions? Not all the types of charities, right? There are certain types of charities, donations. For example, if you contribute to Pradhana Mantri, Prime Minister's Relief Fund, up to certain amount, the PMRF contribution that you do, you can use it as a deduction. Okay, done. Why 2,50,000 reduced? My dear, first 2.5 lakh rupees, no taxation. Can you understand this? you will have to pay salary, or sorry, you will have to pay taxes on 3.5 lakh rupee. But out of 3.5 lakh rupee, first 2.5 lakh rupee, 0% is the tax. Which means after 2.5 lakh rupee, only 1 lakh rupees left out, on which 5% tax will be collected. That is how the taxation will be calculated. Okay. This is basically the concept of deduction. Now, deductions are provided to the taxpayers. The taxpayer could be an individual. The taxpayer could also be a company. It could be an individual, could be a company. So, companies which are also paying taxes to the government, they can also use the deductions and reduce the taxes that they are paying to the government. Now, why this is important? Please understand this very carefully. I said earlier, there was only one rate of a corporate tax in India, 30%. Only one rate was there. But Government of India said there are many companies which are paying 30% tax, but these are claiming deductions. These are claiming deductions. So Government of India introduced a new type of a taxes, corporate taxes to the companies, where they will pay only 22% corporate tax, but without any deductions, without claiming any deductions. So now as a company, you can decide you want to pay taxes at 30% and you want to claim deductions, or you are a company who does not want to claim any deduction, then the corporate tax rate applicable to you will be 22%. Right? But again, argument is simple. Rather than 30%, and now the corporate tax rate has been reduced to 22% for some of the companies. As a result of this, there is this argument whether this decision is correct or wrong. Should government of India, should government of India allow this kind of right, a new taxation policy where, right, you can pay the taxes at 22% without claiming any deduction? Which type of deductions? My dear, depreciation, amortization. Now you tell me, will you understand all these technical concepts? Right? My concern is simple. I can teach about deductions. I can take so many hours on taxation. But again, argument is all of that required for UPSC? So when you keep asking these kind of questions, I will answer it. But now most of the students will be concerned as to what is amortization, what is a depreciation, how it is accounted in the taxation, etc. All of that is not required. Simply remember, certain types of deductions are available for companies. Now, will the policy of Government of India provide any benefit if you reduce it to 22%? What is the reason why Government of India reduced it to 20%? I'm sorry, 22%. Right? Let's do a pro and con analysis for this. Now, what are the benefits? If government will reduce the taxes to 22%, what are the benefits? Point number one, it will attract investment. Yes or no? Rather than paying taxes at 30%, now if you are offered to pay the taxes at 22%, will it attract more and more investment in India? Does it make sense to you? Please do let me know. So it is expected to attract a lot of investment, both from the domestic market and from foreign market. Second, it will promote ease of doing business. Now, very often you will come across the term called as ease of doing business. Now, what is this ease of doing business? Let me give you a statement here. Ease of doing business simply refers to various policies that the government will implement. Various policies the government will implement which will make it easier for conducting business, which will help in doing business in India, which will help in doing business or conducting business in India. Can I give you one example? If Government of India says you want to get 4 licenses, you want to take 4 licenses, rather than going for 4 ministries, rather than approaching 4 different ministries, approach only one authority, all the 4 licenses will be given to you. Please tell me, is it going to promote ease of doing business or not? I'll repeat the statement again. Please answer, please participate. Only then I will understand that you're understanding. Otherwise, I'll simply go on teaching A, B, C, D like this. I'm saying, until now, let's say you wanted to take 4 licenses. You are supposed to go to Ministry 1, 2, 3, and 4, apply for licenses in all the 4 ministries. The government says, don't do that. I will set up a new authority, apply for all the 4 licenses only to one authority. Is it going to promote ease of doing business? Answer is yes. It is going to promote ease of doing business. Right? I'll give you one more example. We have a system called as GST. We'll discuss GST today. We have a system called as GST. And GST will also promote ease of doing business. How? Until GST was introduced, I repeat, until GST was introduced, there were multiple indirect taxes which were imposed and collected at the state level. Done? And there were multiple indirect taxes which were imposed and collected at the central level. Now, what we have done is, majority of these indirect taxes which were earlier under the center, under the state, now have been brought, all of these have been brought under only one tax, goods and services tax. Now you tell me, if you are a manufacturer, what would you prefer? Paying only GST or paying tax to the center separately, tax to the state separately? What would you prefer? Right? Don't you think only one tax will promote ease of doing business? All of you will agree? Right? Even GST will promote ease of doing business. Right? So that is the reason, please understand, many reforms have been implemented by the government, both at the central level as well as the state level, which will promote ease of doing business. Ease of doing business simply means policies which will make it easier for the companies to manufacture, sell, right, promote the manufacturing in India. Right? So that is the idea for ease of doing business. So if you reduce the tax system from 30% to 22%, automatically it will also promote ease of doing business in India. Okay, next one. It has been a long standing demand for the corporates. It has been a long standing demand by the companies in India. Why? I'll tell you. USA, the government of USA, earlier the tax rate in case of USA was right around 35%. The corporate taxes in USA was around 35%. They reduced it to 21%. And not just USA, many other countries also reduced the corporate taxes to lower number. And when you keep on reducing the taxes to lower number in USA, other countries, don't you think the investors, the companies in India will also demand that government of India should reduce corporate taxes? Right? So there is a huge demand that, right? So the taxes in other countries are getting reduced. You should also reduce it. And finally, the government is expecting private sector to increase their investment because the tax rates are lower. It will promote virtuous cycle in the economy. Employment will be generated, investment will be increased. There is a multiplier effect. I will use a term now. I'll explain this. There is a expected multiplier effect. Now, very often you'll come across the term multiplier effect. I'll explain it today. Please remember this. When I talk about industries, I will use the term multiplier. Infrastructure, right? When I talk about investment model, everywhere I'll keep on throwing the term multiplier effect. You don't keep on asking me every time I use it. Remember the concept now itself. What do you mean by multiplier effect? Let me explain with an example. Now imagine government of India will increase investment by 1 rupee. Government of India will increase investment by 1 rupee. Now, can I simply say when government of India will increase the expenditure or investment by 1 rupee, the demand for raw materials will increase? Any problem here? Demand for raw materials will increase. Sir, what kind of raw material are you talking about? Let's say government of India will increase its investment in road construction. Government will increase the investment in construction of road. What is the raw material required for construction of road? Can I simply say raw materials such as, right, let's say the liquid that is used for the construction of road, demand will increase. Labor demand will increase. What if 1 rupee is increased by government of India to construct, let's say, a port? Then the demand for the brick will increase, demand for the cement will increase, etc., etc. So understand the logic here. Demand for the raw material will increase. So one side, production of raw material will start increasing, and on the other side, employment generation will also happen. Agreed? Employment generation will also take place. And when the production will increase, supply to the market of these goods and services will increase. And when employment will increase, the demand for the goods and services in the market will also increase. Now, as a result of all of this, can I say GDP will also increase? Let me know. As a result of all of this, can I conclude and say GDP will also increase? Which means by increasing investment by government of India, increasing its investment, the GDP is also increasing. Let's say if government of India will increase the investment by 1 rupee, and because of all of this, if the GDP increases by 3 rupee, can I call multiplier effect of 3 times? Let me know. I'll repeat it again. If government of India will increase the investment by 1 rupee, and as a result of this GDP will increase by 3 rupee, can I say multiplier effect of 3 times? This is the basic idea for multiplier effect. Now instead of government of India, can we observe multiplier effect because of private sector also? Think of it. Instead of government of India, can we also make an right? Can we also have a multiplier effect because of private sector? Answer is yes, by the way. Because whether the investment comes from the government or from the private sector, ultimately what is the outcome? Ultimately the outcome is GDP is increasing, right? So the argument is simple. When the government of India is expecting more and more private sector investment because of a lower tax rate, can we also expect a higher multiplier effect in the economy? That is one of the benefits here. That is one of the benefits. Okay, so these are some of the advantages or the benefits that the government is expecting to get by reducing the corporate tax rate. But on the other side, there are also certain concerns or issues related to this. First one, if government will reduce the tax rate from 30% to 22%, don't you think the tax revenue that the government will collect will automatically come down? Think of it and let me know. If government will reduce the tax rate from 30 to 22%, what will happen to tax revenue collected by the government? Tax revenue collected by the government will automatically come down. So that is one concern. Second concern, the investments that we are expecting to happen, the investments are also affected by so many other factors. Right? So many other factors. For example, what if government will reduce the tax rate to 22%, but there is no skilled labor available in India? Please tell me, if you're the investor, the government of a country will reduce the tax rate, but in that country, skilled labor availability is not there. Will you invest? You want to invest, but the acquiring of land, acquisition of the land is not easy in that country. You want to invest, but getting licenses is not easy in that country. So don't you think there are so many other factors which will have an impact on whether the investments in the economy will increase or not, apart from taxation? Yes, taxes will have an impact, but apart from taxation, there are so many other measures also which are required by the government to be implemented in order to promote more and more investment. Right? So increase in the investments will also be affected by so many other factors such as labor availability, skilled labor availability, how easy it is to acquire land. And remember this point, it is not easy to acquire land in India. I'll repeat the point here. It is not at all easy to acquire land in India. Never easy to acquire land. Can I give you a current affairs example? Current affairs example. Right? Have you heard of a bullet train project? Have you heard of bullet train project? Right? The proposal of the project basically supposed to run between Mumbai and Ahmedabad. Right? Bullet train project. It was supposed to be completed by 2023. Check it. It was supposed to be operational by 2023. Is it operational today? No. Bullet train project, it is not yet operational in India. We have postponed the completion date to further date, 25, 26 now. Why? What is the reason? One of the reason is land acquisition. I hope you understand. One of the reason is a land acquisition. And that is the reason again and again I'll keep on hammering this point. You simply write this point as a fact in UPSC mains. If you want to write about infrastructure, if you want to write about road projects, railway projects, what is the reason why there's a delay in India? One of the reason is acquiring land is never easy. Right? Land acquisition is very, very complicated in India. Right? I'll give you one more example. Right? All of you heard of Tata Nano? Let me know. All of you heard of Tata Nano? The original plant for Tata Nano was supposed to be constructed and made operational in West Bengal. What happened? Opposition to the land acquisition, opposition by the people. And as a result of this, from West Bengal, the nano plant was forced to be shifted to another state, that is Gujarat. So I hope you understand this. There are a lot of examples where you can simply understand because of the land, projects will be delayed, projects will be cancelled, right? And many of the times, the cost associated with the project will also keep on increasing, right? So investments are also a function. Investments are also affected by so many other factors. And the third one, there are various other policies of the government of India. There are various other policies of the government of India which might hinder more and more investments in India. For example, government of India says manufacture in India, right? I've reduced the tax rates, bring in the money and invest manufacture in India. But equally on the other side, government of India wants you to purchase the raw materials from India. Government wants you to invest and promote domestic manufacturing. But what if you want to import it? Can you understand the problem here? What if you want to import it? I'll give you a current affairs example, right? Let me know whether this is basically the same point I'm discussing now. Have you heard of a FAME scheme? If you say no, it shows that you're not reading newspapers. Right? FAME, faster adoption and manufacturing of electric vehicles. FAME scheme. Under the FAME scheme, government wants more and more production of electric vehicles. I'll use a short form, EVs, electric vehicles. And in order to promote, right, the production and sales of electric vehicles, government of India identified one problem. What was the problem? The price of electric vehicles is very, very high. The market price of electric vehicles is very, very high. So what government of India did under the FAME initiative was, government started providing subsidies. Government started providing subsidies for electric vehicles. And government said, if I provide subsidies per vehicle like this, automatically the market price will go down. And if the market price will go down, what will happen to the demand for electric vehicles? The demand for the electric vehicles should go up. So the adoption of electric vehicles should automatically increase. This is the objective under FAME. But please understand, not all the companies which are manufacturing electric vehicles will be eligible. Understand this carefully. Not all the companies which are manufacturing electric vehicles will become eligible for the subsidy here. Why? There's a condition. What is the condition? 50% of the components. 50% of the components 50% of the components that you want to use in the manufacturing of electric vehicle, you will have to source it from the domestic market. Any problem with this? 50% of the components that you are using to manufacture electric vehicles, you will have to purchase it from India. You cannot import it, right? You will have to purchase it from Indian market itself. Now, please tell me, these kind of conditions, these kind of policies of the government, no doubt, the objective is to promote domestic manufacturing. I'm not criticizing that on that front. Government wants more and more promotion of manufacture in India. That is objective. But please tell me, if you're a foreign investor, you want to invest in India, but this is the condition. Will you prefer to invest in India? Don't you think some of the foreign investments will look at it and say, we cannot meet these targets, we will stay away from India? That is the point I'm trying to make here. I hope you understand. That is the point. Again, please understand, you can have a critical evaluation for all of it. Right? Is a FAME initiative good? Of course, yes, it is good. We want to reduce import dependence on fuels. We want to promote consumption of electric vehicles. So you can make the evaluation based on the good aspect as well as bad aspects as well. Right? So all I'm saying is, if I were the investor, I will look at these kind of conditions imposed by the government. I would simply say, no, not worth investing in India. I will stay away from India. Right? So that is the concern I'm raising here. There are various other policies of government of India which might hinder right investments from flowing into India. Done. So these are the benefits. These are some of the issues or concerns relating to right the corporate tax rate reduction that has been done by government of India. Let me go to the next one now. Right, yesterday there were questions regarding capital gains. Right, there was one student who was asking questions on capital gains. Let me explain this. What is the idea of a capital gain? Let me start with an example. Imagine I will purchase an asset, right? And many of you will ask me, sir, what do you mean by asset? Asset simply means anything that will fetch value to you. Anything that will fetch value, anything that will get returns to you, it is called an asset. Now I'll purchase an asset. For example, I will purchase land. I'll purchase land. So when I purchase the land, I paid, let's say, 1 crore rupees. I'll take simple numbers so that you understand it. When I purchase the land, I will pay 1 crore rupees. Then after some time could be after 1 year, after 3 years, after 6 months, whatever it is. After some time, I will sell the land at 3 crore rupees. Okay, I'll sell the land at 3 crore rupees. Now, please look at the numbers and tell me, have I made gains or not? Common man will use the term profit. Government says gains. Right? Look at the numbers and tell me, have I made a profit? Have I made a gain on the sale of the asset or not? I purchased it at 1 crore. I sold it at 3 crore rupees. So can I simply say I have made a gains of 2 crore rupees? In fact, I'll be very technical here. I know some of you are from commerce background. You will start correcting me now, etc., etc. For common people, those who are from a different background, do not worry about calculations. Trust me when I say this. If you don't trust me, please look at the last 10 years question paper in economics, mind you. Find out if there is any question which is asked on calculation. Let me know. I know for a fact it is not there. Right? So for other students, don't worry about calculation. Understand the logic concept. And before I go forward, the point I was trying to make is, in this example, I've directly written it as 2 crore. But in reality, it will not be 2 crore. It will be less than 2 crore. Why? I'll tell you. Let's say I purchased the land in 2022. I sold the land in 2024. Please tell me, do you think the value of the money will remain same between 22 to 24? Let me know. Do you think value of the money means what? Purchasing power. Do you think purchasing power of the money will remain same between 20 to 24? No. And that is the precise reason. There is a concept of indexation. There is this idea of a indexation. Right? There is one index. We will adjust this 1 crore rupees, maybe using that index. This 1 crore, because of inflation, it will become, let's say, 1.3 crore. Let's say hypothetically, because of indexation, this 1 crore will be becoming 1.3 crore. Now, how much is the capital gains? Right? 1.3 crore and 3 crore, your capital gains will become 1.7 crore rupees. Government will impose a tax on the capital gains. I repeat, government will impose a tax on the capital gains and collect. And this tax is called as capital gains tax. Any difficulty in understanding this? Any difficulty, please do let me know. And when I talk about capital gains here, there are two classes. Generally, there are two classes. One is a movable asset. Second one is a fixed asset. Movable asset means, right, let's say I have purchased gold. Let me know. I've purchased gold. Gold is a movable asset or immovable asset? Tell me, is gold a movable asset or an immovable asset? Can I say gold is a movable asset? On the other side, I've purchased land. I've purchased land. Land is a fixed asset or an immovable asset. So generally, whenever you talk about assets, there are movable assets, there are immovable assets. You will purchase the asset, own it, hold it for some time, sell it in the market, and whatever is the capital gains, whatever is the gains on this asset, it is called as a capital gains. Government will impose a tax on it, and that is called as capital gains tax. Now, please understand, initially, all these assets were grouped into only one class. There was no different classification. Only one classification. What was the classification? Whether the asset that you have purchased, did you own it for 3 years and then sell it, or did you own it for less than 3 years and sell it? For example, let me check whether you are able to understand this or not. Imagine you'll purchase the asset. You'll purchase the asset in financial year 23 and you will sell the asset in financial year 28. Can I simply say the asset was owned by you for more than 3 years? Tell me, tell me now. You purchased the asset in financial year 23, you sold it in financial year 28. Can I say you owned the asset for more than 3 years? On the other side, imagine you purchased the asset in financial year 23, sold it in financial year 24. Whatever the date is, don't worry. Can I say ownership was less than 3 years? So in one case, when you will sell, but the ownership, holding period, they will use a different term, ownership or also holding period. Ownership or holding period. When the ownership or holding period was more than 3 years, or when the ownership or holding period was less than 3 years. So there was two type of a grouping here. When it is more than 3 years, government will impose a tax by the name of long-term capital gains tax. They will call this as long-term, more than 3 years, long-term capital gains tax. And you purchase and sell within less than 3 years or before 3 years, the government would simply consider this as short-term and impose a tax which is called as a short-term capital gains tax. Any difficulty in understanding this? Initially, it was simple. Less than 3, short term. More than 3, long term. But later, after the introduction, the government started making changes. For some of the asset, I repeat, for some of the asset, the holding period was changed from 3 years to 2 years. For some of the assets, the holding period was changed from 3 years to 1 year. I hope you understand this. For example, right, let's take an asset such as shares. There is an investment instrument available in the market, shares. You purchase a share, you sell it before 1 year, and you earn capital gains. It will be called, the government will impose a tax, short-term capital gains tax. You purchase the share, sell it after 1 year, right? That is long term. Hence, government will impose a tax, long-term capital gains tax. So, for some of the asset, holding period was changed to 1 year. For some of the asset, holding period was changed to 2 years. And for remaining asset, it is even today 3 years. Now, please tell me, is the system simple or complicated? Think of it. Is the system simple or complicated because of all of this? The capital gains tax structure in India is very complicated. It's very, very complicated. And that is the precise reason. That's a precise reason. Government of India is looking into simplifying the capital gains tax structure because of different tax rates. Tax rates are different, different holding periods, right? There is so much of complication. So government of India last year, it was expected that in the budget, right, there will be a simplification of the capital gains tax structure. It has not been done. Even today we are using the same structure. We are simply using the same structure, very very complicated, right? So this is a basic idea for capital gains tax. If there is any issue, please do let me know, otherwise I'll go forward. What if it is sold at 1.2 crore now? Please understand this. As per indexation, I repeat, as per indexation, your value should be, let's say, 1.3 crore. And if you actually sell it at 1.2 crore, please tell me, is there a capital gain or capital loss? Let me know. As per indexation, it is 1.3 crore, but you have sold it in the market at 1.2 crore. Are you earning capital gain or a capital loss? You are getting capital losses. I hope you understand. You are getting a capital loss. So, of course, no taxation. If there is a loss, no taxation. Government will not impose a tax on a loss. Right? So, in capital losses, no taxation. In capital gains, taxes will be imposed. Can we go forward? Can we go forward? If there is no issue, I'll go forward. What about buyer? What about buyer? In what context are you asking about buyer? Please do let me know. Right? Can we go forward? Okay, done. Next concept. Okay, before I go forward, yesterday there was a question. There is this argument of capital gains not included in the income, sorry, national income. The argument is simple. Why do we not count capital gains in national income? Is there production of any new good or a service? Let me know. Whether you purchase and sell shares, whether you purchase land and sell, whether you purchase gold and sell, does the capital gains that you have earned, does it represent a new production? No. And in national income, right, that is a simple version, that is GDP, are we not counting the goods and services which are sold, which are produced and sold? And that is the precise reason capital gains generally it is not accounted when you're calculating national income. Okay, done. Can we go to the next one? Next is the concept of tax avoidance. Important for UPSC, please be very careful. There's a concept of tax avoidance. Now, what is this tax avoidance? And please understand this very carefully. Tax avoidance simply refers to, right, certain strategies. I repeat, right, certain strategies which are used by the taxpayers. As a result of this strategy, the tax paid by the taxpayer will go down, and these strategies which are used by the taxpayer are not illegal. I'll repeat the definition, same thing I've written here. Please understand. What do you mean by tax avoidance? Tax avoidance refers to certain strategies, right? Certain strategies which are used by the taxpayer, which are not illegal, but by using these strategies, the tax payment done by the taxpayer will go down. This is called as a tax avoidance. Now, how can they do that? I will prove it. Don't worry. I will prove that. You don't have to be worried. I'll give you examples. Do not by heart all the examples. UPSC is not going to ask all of that. But you should understand the concept behind it. Now, please understand, whenever there is a tax avoidance, in fact, before I tell you about this, I want to introduce one more concept here. There is a term called as a tax evasion. Many of the students generally get confused between tax avoidance and tax evasion. Both are different. Please understand this very carefully. Right? Both the tax avoidance and tax evasion are nothing but referring to strategies. Both refer to strategies. Right? That is certain measures that are taken by the taxpayers. Tax avoidance is not illegal, which means it is not illegal, it is illegal. Tax evasion is illegal. Tax avoidance will reduce the tax burden. will reduce tax burden, and even the tax evasion will reduce tax burden. Will reduce tax burden. But now you will ask me, sir, any example of a tax avoidance? Any example of a tax evasion? Let me give you a straightforward example of a tax evasion. Imagine I'm a businessman. Okay, imagine I'm a businessman. In last financial year, I've made income of 10 crore rupees. I've earned income of 10 crore rupees. But when I'm filing the income taxes to the government, I will simply declare this income as 2 crore rupees. Please tell me, is it legal or illegal? I hope you understand. My income is actually 10 crore rupees. But when I declare the income to the government, because I'll have to pay income taxes now, I will declare this income as 2 crore rupees. And is it possible? Of course, yes, my dear, it is very much possible. Can I prove it? What if most of the transactions that I've done are cash based? Many of you ask me, sir, is it even possible? Yes, it is possible. What if most of the transactions that I've done are cash based? Cash based means what? I will sell certain raw material, I'll receive the payment in the form of cash. I will sell certain products, I'll provide certain services, I will receive the payment in the form of cash itself. Now, when the transactions are going to take place in the form of cash, is there any way for the government to find out what is my actual income? Tell me. If the transactions are going to take place in the form of cash, can Government of India find out what is my actual income? It's very, very difficult. Very, very difficult for the government. Or else, I'll give you best example. Tell me how many people, how many of you are living in a rented house? Or how many have given the house on a rent? And how many of you are receiving the payment in the form of cash? The rental income, think of it. The rental income, how many of you receive the rental income or pay the rental income in the form of cash? Right? Don't you think there is a particular reason why the landowner, right? Why the owner of the house is asking the payment in the form of cash? There is a reason for it. If the person accepts the payment, that is a rent payment in the form of cash, where is the document for the government to say how much income has been earned by the person? I hope you understand. So understand the logic here. Tax evasion, what are we trying to do? We are reducing the tax burden. We want to pay lesser taxes. If I ask you, you want to pay more taxes, lesser taxes, or no taxes? I'm pretty sure all of you will choose the last one. I hope you understand this. If I give you an option, you want to pay more taxes, less taxes, or no taxes, most of you, if you answer honestly, some of you will say, no, sir, I want to serve my country, etc., etc. No. Honest answer, including me, by the way, we will choose no taxes. Government knows that. And that is the precise reason government has an option to collect some amount of the taxes either directly or indirectly from you, from me, from everyone in the system. Right? So what is the objective of tax evasion? I want to reduce my tax burden. That is the objective. But the methods that I'm using are not legal. These are illegal methods. But ultimately, the tax burden on me will come down. Now come to the second side. What is this tax avoidance? Where tax burden will come down. None of the methods are illegal. These are perfectly legal. And these are nothing but the strategies to reduce the taxes. Let me explain using one example. Please do not by heart. Please do not by heart the calculations. UPSC is not going to ask you these calculations. Now follow this very carefully. Follow this very carefully. Right? Imagine there are two countries, country 1, country 2. And the tax rate in country 1 is 30%. That is, let's say, corporate taxes. And tax rate in second country is 10%. Now please tell me, if you have option to pay taxes, would you want to pay taxes at 10% or at 30%? Let me know. Would you want to pay the taxes to the government at 10% or 30%? All of you will choose 10%. But the problem is, you have set up a company. You have set up a company in country one, right, where the corporate tax rate is 30%. But you want to reduce the tax liability. So what can you do? Can you avoid taxes? Yes, there is a method. Follow this very carefully. The company A will manufacture a product, right? Sell it. The cost of manufacturing is, let's say, 1,000 rupees, and they will sell it in the second country at 5,000. Do not worry about anything else. Focus on simplified calculation. So you manufactured it at 1,000, sold it at 5,000. Can I say profit is 4,000 rupees? Any problem? Can I say profit is nothing but 4,000 rupees? Now, where are you registered? As a company, where are you registered? You're registered in the country one. So, on the profit of 4,000, you'll have to pay how much corporate tax to the government here? 30% corporate tax, which will translate to how much? 1,200 rupees taxes paid by you. Any problem with example one? Any problem with example one? Please do let me know. Right? There is 10% tax in country two, but you are registered where? You are registered where? You are registered in country one. So you'll have to pay corporate taxes in country one. So you will end up paying 1,200 rupees. But now look at the next example. Very beautiful system. And this is perfectly legal. Before you start asking me, is it allowed? Yes, my dear, it is allowed. Can I give you best examples of this? Where do you think Google pays the taxes? Or for that matter, Alphabet. Google is nothing but, right, the parent company is Alphabet. Where do you think Facebook is paying the taxes? Where is Apple paying the taxes? Right? Or for that matter, even Amazon paying the taxes. These are very big companies, very, very large companies. Many of you will be under the impression that they will pay the taxes in America because these are American companies. But my dear, understand this very carefully. These companies do not pay the taxes in America. They will pay the taxes in some other country where the tax rates are very, very low. I hope you understand, where the tax rates are very, very negligible. 5%, 10%, 1%. In some countries, the tax rate is 0%. And is it possible? Of course, yes, it is possible. How? I'll give you one example. Same company, you are operating this company. So you will open company A, you are registered in country, right? One. In country one, the tax rate is 30%. You don't want to pay taxes at 30%. So what you will do is, you will set up one more company, that is company B, in second country. Look at this. You will set up one more company, that is company B, in the second country where the corporate tax rate is 10%. Now, you will manufacture a product at 1,000 rupees. You will not directly sell it to customer. No, you will not directly sell it. What you will do? The company A will sell the product to company B at 1,200 rupees, which means company A is generating a profit of how much? 200. All of you will agree? Company A is generating a profit of 200 rupees. Now, company B will sell the product to the customer in the second country at 5,000 rupees, which means company B is generating a profit of 3,800 rupees. Now, do the calculation. Do the calculation. Company B is registered where? Second country. What is the corporate tax rate in the second country? 10%. So 10% of 3,800, company B will pay 380 rupees to the second country. Company A is earning a profit of 200. Corporate tax rate is 30%. It will end up paying 60 rupees to the government of country 1. So from example 1 to example 2, what has changed? Here, in example 1, total taxes paid by you. Whatever company you have, total taxes paid by you is how much? 1,200. And in example 2, the total taxes paid by the companies that you own. Again, you are only owning both of these countries. But how much is the taxes you are paying now? You are paying 440 rupees taxes. Please tell me, point number 1. Is it illegal? Right? Is it allowed in the system? Of course, yes, it is allowed. Many companies do this. Is it illegal? No, this is not illegal. Second, is it a type of a strategy used by the taxpayer? Yes. And third one, because of this strategy, is the government of country one losing tax revenue or not? Let me know. Because of this strategy used by the taxpayer, is the government of country one losing tax revenue or not? Yes. Is the tax burden on the taxpayer coming down? Again, the answer is yes. So this is an example of a tax avoidance. This is a primary example of a tax avoidance. So companies, right, companies are involved in the tax avoidance, under which this is not illegal, this is perfectly legal, wherein companies will use a different strategies, and because of these strategies, the tax liability to the government will come down. But this is a problem for developing countries. Understand this very carefully. This is a problem for developing countries. It is problem for both developing and developed. But please think of it and tell me, between developing and developed countries, between developed and developing countries, don't you think developing countries' reliance on the tax revenue will be much more? Because a developed country, government will have different sources of revenue. But for a developing country, the most important source of revenue is taxation. Best example, India. And in case of a developing country, if companies will go for these kind of tax avoidance measures, then the impact of tax avoidance will be much more on a developing country compared to a developed country. Any problem so far? Please do let me know. Otherwise, I'll go forward. Any problem so far? Can I go forward? Now, I'll introduce one more concept to you. I'll introduce one more concept. Please have a look at both of these examples. Can I say from example 1 to example 2? When you move from example 1 to example 2, the tax base, I repeat, the tax base of country 1 has come down. Any problem? I'll repeat it. If you move from example 1 to the example 2, the tax base for country 1 has actually come down. Correct? Yes or no? Please do reply so that I know. Tax base has actually come down. And point number 2, from example 1 to example 2, what you can observe is some of the profits of the company are getting shifted from country 1 to country 2. Is it okay? I'll repeat it again. What you can observe, what is the inference you need to make? The tax base for the country 1 has gone down. And why the tax base has gone down? Some of the profits of the company which is owned by you, some of the profits you are shifting from one country to another country. Right? Earlier in example 1, all the 4,000 rupee profit was earned by only one company. But what has happened in example 2? Out of 4,000, you are taking profit of 3,800 rupees. You are shifting that profit from country 1 to country 2. Right? Now, this is important. Why? This process is called as base erosion and profit shifting. Please look at the statement here. This is referred to as base erosion and profit shifting. What do you mean by base erosion and profit shifting? The multinational enterprises, the MNEs, will exploit, will basically abuse the taxation system by transferring some of the tax base, that is the profit, from one country where the tax rate is very high to another country where the tax rate is very low. Because we are shifting the profits, the tax base of one country will go down. This is called as base erosion and profit shifting. Any problem in understanding why this is called as a base erosion and profit shifting? Please do let me know. Any problem in understanding why this is called as a base erosion and profit shifting? If there is no doubt, I'll go forward. If there is a doubt, I'll clarify it. What do you mean by base erosion? My dear, do you remember the term tax base? Please do let me know. Do you remember the term tax base? Tax base refers to any object on which you impose a taxes. Now, profit of a company, is it part of the tax base? Profits earned by the company, is it part of the tax base? Answer is yes. Now, what has happened to the tax base here? Look at it. From example 1 to example 2, what has happened to the tax base? That is profit. Profit, right, of the company A in example 1 was 4,000. In example 2, profit has come down to 200 rupees. And this has come down because some of this profit now will be registered, will be recorded by one more company outside country 1. So the profits has come down, tax base has come down. Can I use the term erosion? Coming down, that is right, eroding. Tax base has eroded. So base erosion because there is a profit shifting. What is the definition of tax base? What is the definition of a tax base? The object on which the tax is imposed. Example, income. Example, wealth. Example, asset. Example, profit of the companies, etc. That is the tax base. Okay, can we go forward? Any problem with whatever I've discussed so far? Please do let me know. Otherwise, I'll go forward now. Right, so this is basically called as base erosion and profit shifting. Now, can I say base erosion profit shifting is problem for both developing as well as developing countries? Any problem here? Right, it is a problem for both the developing as well as the developed countries. And that is the precise reason. What has happened is there is a group of countries which is called as G20. There is a group of countries which is called as a G20, that group of top 20 countries. India is one of them. And there is also one more group of countries which is called as OECD, Organization for Economic Cooperation and Development. I'll repeat the expansion of it. Organization for Economic Cooperation and Development. So what has happened is the OECD plus G20, these countries have come together. They have discussed and they've introduced a new system. A set of guidelines have been issued by both OECD plus G20. And this action framework or this document which has been issued by this group, it is called as BPS Action Plan. This document is called as a BPS Action Plan. And in this BPS Action Plan, simply remember 2 points here, right? The action plan has 15 points, right? We say 15 pillars. Pillars is nothing but points. So in the BPS Action Plan, there are 15 pillars or 15 actions. And 141 countries are actually implementing these BPS Action Plan pillars. Is India one of them? Yes, India is also one of them. So this is basically the idea of a base erosion and profit shifting. And can I say BPS action plan, right? The argument of BPS action plan is to address the issue of tax avoidance. Let me know, right? Don't you think the BPS action plan, right? One of the targets that they want to do or they want to achieve is basically there is a lot of tax avoidance. We want to address the issue of tax avoidance, right? That is the importance of BPS action plan. Done? Any problem with all of this? Please do let me know. Now there is a term called as a transfer pricing. There's a term I've written here, transfer pricing. What do you mean by transfer pricing? Company A will sell a product to company B. Simple idea. A will sell something to B. What is the price paid by B? It is called as transfer pricing. Is it okay? I'll repeat it again. Company A will sell something to company B. One company will sell something to another company. So when second company will purchase a product, what is the price paid for it? That is called as transfer price. Right? In this example, can I say transfer price is 1200 rupees? Let me know. In the example that I've written here, that is example 2, transfer price is 1200 rupees. Yes or no? Right? That is a basic idea for transfer pricing. So companies through transfer pricing might be involved. I'm not saying everybody does it. That's the reason I'm saying might. Companies through transfer pricing might be involved in the tax avoidance. That is a concern. That is definitely a concern. We are implementing lot of measures. We'll discuss couple of more measures as we go on. Don't worry. One of them is base erosion and profit shifting. One of the students says, what is the long form? What does BEPS stand for? My dear, just after the short form, I've written the long form. Please look at it. Base erosion and profit shifting. Okay, done. So let's take a break now. Let's take a break. But before that, if you have any kind of a doubt, please do let me know so that I can address right the issue, or else we'll take the lunch break now. Any issue? Any doubt, any concern that you have so far with whatever we have discussed, please do let me know. 15 pillars explain. My dear, you don't have to remember all the 15 pillars, right? I expected this question. Some of you are worried about 15 pillars. Don't by heart all the 15 pillars. Not at all needed. In fact, if I show you the names of them, right, these are very, very technical in nature. Please do not by heart. Not at all needed for UPSC. Okay. Sachin, please receive the call. Anybody wants to make a call, right? Please do it. BEPS, base erosion and profit shifting. BEPS simply stands for base erosion and profit shifting. If you make an observation, please observe. That's what I keep on telling you people. Please observe. From example 1 to example 2, what is actually happening? You're observing that some of the profits are getting shifted from country 1 to country 2. And because the profits are getting shifted from country 1 to country 2, the tax base of country 1 will erode. Erode means go down. Right? So the tax base for country 1 will go down. Hence, base erosion. And why is the base eroding? Because the profits are getting shifted. Because the profits are getting shifted, right? The base is eroding. Hence, it is called as base erosion and profit shifting. Okay. GDP at PPP, we'll discuss that. Don't worry. Right? Gaurav is asking GDP at PPP. My dear, I need to explain the concept of PPP to you. I'll explain that. Promise I'll explain that, but not today. I need to explain the concept of right, basically the exchange rate. I'll discuss that. Have patience, I'll cover that as well. There is in fact one separate slide for purchasing power parity. I'll show what is the idea for PPP, how do we use it to calculate GDP. Don't worry. Okay, V Hari, please receive the call. At what time the next class will start? The moment I take a break plus 1 hour. Simple. When I take a break plus 1 hour. Okay. Vishal, it is showing to me that it is ringing. G20 means a group of 20. Group of 20 countries. What is a transfer pricing, my dear? I own a company, you own a company. I will sell this remote control at 100 rupees to you. So what is the price at which you have purchased the product? 100. That is called as transfer price. That is basically called as a transfer price. Okay. Okay, I'm making a call, but nobody is receiving. Uh, is tax avoidance possible in one state to another state? Of course, yes. Tax avoidance is possible. I'll show you that. I'll show you that. Don't worry. I'll prove that there's a tax avoidance possible even right between the states. I'll prove that. Don't worry. Okay. Nobody is answering. I don't know. Okay, done. So let's take a break then. Let's take a break. Okay. Before that, due to supply side inflation, if inflation increases but growth is normal, then government should focus on reducing inflation or increase economic growth, because both are related. Okay, due to supply side inflation, if inflation increases but growth is normal, how, you tell me, how do you say market prices are higher but growth is normal? Please do let me know. Right, don't you think if inflation in the whole economy starts increasing, automatically GDP will also start increasing? Let me know, does it make sense or not? If the market price increases, right, if the market price increases, don't you think at least for short duration GDP should also increase? Because what is GDP? If you are still confused, what is GDP? GDP is nothing but market price of all the final goods and services. Imagine this is the only product manufactured. If the market price of this product goes up, inflation on one side, inflation, but on the other side, if the market price goes up, what will happen to GDP? GDP should also increase, right? So your hypothetical situation, it doesn't exist, right? Because if the market prices goes up, at least for a short duration, even the growth will also keep on happening. Okay. So in yesterday's PPTs, only 3 articles are there. No, my dear. I've shown you the PPTs, right? I've shown you the PPT slides when I was teaching, when I started, right? So more than 3 articles are there. I believe around 10 plus articles are there. Please use all the 10 articles. Okay, done. Okay, so let's take a break now. Let's take a break. So we'll restart at 2:25. Right, time is 1:25 now. We'll restart at 2:25 p.m. Okay, please join again at 2:25 p.m. Okay, thank you. Take a break now.